going forward. Wells Fargo cut the firm's price target as well to $55 from $60, keeping an equal weight rating. While the analysts called DocuSign's results clean for the second consecutive quarter, they noted that revenue and billings margin, they have an upside as well, but that's a limited upside, and they say continued expansion pressures as this company tries to deal with the macro conditions. Now, Morgan Stanley, on the other hand, called the quarter strong. It raised the price target to $51 a share.
All right, looks like DocuSign could add about 1% if we opened 20 minutes early. Still will be negative year to date, but chipping away at some of those losses today. Renita Young, thanks so much for breaking down those earnings for us. Coming up, we'll talk macro with Sam Burns from Mill Street Research. Does the latest economic data mean the Fed's hiking cycle is over? He thinks so. He'll explain why next on Morning Trade Live. We'll be right back.
I remember when I first started flying.
Good morning. 9:45, September 8th. We're going to be streaming stocks, options, futures trading today. Market opened a few minutes ago. And we're here. GNS up 4.5. SPY. Big rip out of open. I'm going to kind of be touch and go for the first 30 minutes or so here. Let's see. This bull flag on the market. Sub up, like up, comment down. Happy money sticks around. Look at GME. So I'm not sure the sell off on GME, honestly. That story of the lawsuit against Ryan Cohen is like recirculating, but I don't think that has anything to do with it. They just have that article all queued up, ready for the stock to move, and they'll just put it out. Nice little bull flag here on that. Getty's up for the AMC's down for course. Let's see. We got barbecue down 5. Yeah, I guess it did rip end of day. That makes sense. GME really selling off this morning, down 6.2 now. Well back under its resistance line there. Should have kept my covered calls. I rolled them to next Friday thinking probably won't close below 17 today. We'll see though, it's a pretty big sell-off. Are they blaming it on that news? Yeah, that's that's not why. Maybe some insiders are selling or something, I'm not sure. Maybe it's just getting shorted again. 0.5%. A pretty big move actually. I getting close to that resistance up there. See if it rejects that or break through it. GNS 7.5%. Barbecue's down 6. So basically just back where it was yesterday. Back under that resistance. SPY still kind of bull flagging up here, up 0.25%. Morning, Cassidy. I think they should be investigated. I don't know about the details to have an opinion, I guess. I don't know his intent, his motive. I don't know what they're basing it on, you know. Morning, Sam Hart. Good morning, Guts. Bonjour, Benjamin. You ready on GameStop barbecue? Yeah, get ready for them both sell off. Morning, Cassidy again. Finger going, popping like what, 2%? Finger dropping. Bought some puts, Bubblicious. Never fail. Thermogenesis. Trading or watching the screen? Well, I watch the screen and trade. 8.5% there on GNS. Doubled down yesterday. I know it's kind of a strange move out of the gate with the GME with the after hours sell off, and then this morning I don't know, it's kind of weird. Kind of weird. 7.5% almost. If SPY bounces on VWAP. We did get an engulfing candle there, that's not good. I don't like it. SPY coming down there a little bit. GME down 7.25 now. Barbecue holding down 6. Dish is up 1.5. Look at you. Add down 1.5. Mullen doing down 2.5. AMC down 3. It's crazy seeing all these articles with price targets on AMC of like $40 and stuff. Basically back where it was before this crazy dump. Sharino's 1.5% today, huh? Back above VWAP. You me down 7.7. Wow. "30 minutes since open, SPY just made a big bull flag. Pretty crazy rip out of the gate. Back into calls there. See if we can hit that resistance. New high of the day. Give me a bounce in there a little bit. GNS up 8.5. Holding above that 111 now. Seems like a nice amount of support being built here. I just kind of chopping around up here though. No breakout yet. Barbecue. Book candle up there, down 2.5. See if it rejects this resistance again. New high of the day. There goes Spy. Boy. Barbecue right up at that resistance. Almost even. GME down 6.3. Look at that Spy. Rip. Rip. Alright, let's see. Closing out of one of these contracts. Barbecue rejecting that resistance.
still at stubbornly elevated levels. In a similar situation in terms of the 2-year, you got it hanging out just below 5% at 4.8.
All right, we'll leave it there. Ben Lichtenstein, always a pleasure. Thanks so much. Time for the morning trade. We're going to focus on Apple. Joining us for that is senior markets correspondent Kevin Green. Kevin, happy Friday. So Apple shares actually higher today, up about 1.1%, but it's been a tough week for Apple, down more than 5% this week. Bring us up to speed on the latest news from China. So China's expanding.
Big red candle there, back to VWAP.
Yes, they are actually expanding it to include state-run agencies, and they're informing their personnel not to bring their iPhones into work. And now this is just another layer on top of some of the back and forth that we've seen between the United States and China. And now it appears that China is really trying to target Apple. And so that did cause a little bit of a pullback when it came to the stock, but we are seeing a little bit of a rally here today. Let's see if it's going to be able to last. But what we are actually seeing is this type of the scenario where China is really trying to become a little bit more nationalistic. We know that they have some competitors in China that could also try to match Apple's products when it comes to cell phones and things of that nature, and has dampened the expectation of the September 15th announcement when it comes to the iPhone 15 and this unveiling, this Apple event, if you will. Now, we also know that Morgan Stanley actually maintained their overweight rating on the shares, and they kept their price target at $215. They do believe that the recent dip in the stock due to the Chinese government moves is a little bit of an overreaction, and they do view
there is a gap down there on GME.
Very unlikely.
17,
And
18.
they also emphasize the relationship between the U.S. and China economy and the fact
No
that
RSI divergence there on that rip.
Jobs when it comes to China, and there's some
That looks pretty
estimates out
good.
there that this could have a major impact if we do see a complete ban of around 15 million jobs that could potentially be lost or impacted in China if we do see an outright ban for Apple. We are not at that stage yet, but something very interesting to note. We also have JP Morgan maintaining their overweight rating on the shares, but they do lower their price target to $230, and that's down from $235 here. They do believe that the forecast when it comes to iPhone 15 sales is going to be a little bit dampened because of this news, and that the valuation
shorts closing
to what the stock is trading at right now,
shorts close, the stock was up.
Maybe for iPhone 15 sales.
I'm not sure what stock you're talking about, but
overdone here. So overall, we are
GME
still
at least, that's what you'll see.
Bullish on the
Easy
shares
go.
in itself.
27%.
Believe that some of the headwinds here
Wow,
are
this
just going
thing
to be
took up-
short term, and that the
took a
iPhone
dump.
15 sales
What
for
the
the
heck?
most part may already
That
be
from a
priced
split?
into the stock, even if they are seeing a little bit of a dip because of these restrictions, as well as just slowing demand, especially in China.
All right, yeah, Apple shares still up about 38% year to date. But let's go back to that launch event on the 12th of the iPhone 15, of course, expected to be introduced. Do you think that's enough of a bullish catalyst to turn this stock around, or do you think it's priced in at this point?
Yeah, definitely. So from a seasonality standpoint, when you actually see this event come up, we typically see Apple stock rallying into the event, and then the day of the event, we start to see it pull back, kind of like a by the rules.
I don't know what GME's doing.
Event. And honestly,
Rejecting
actually, a
that
lot of the
breakout.
information, what we perceive and what's been
Kind of
put
interesting,
out
though.
in the media here has already really been priced in here. So I'm not sure if they're going to unveil something new that the street really doesn't know about right now. That could be a positive catalyst. But if you're just looking at it from a seasonality standpoint,
Headed back into
it's
some
kind of
calls
tough
there.
to really try to play this event and trying to see a continued catalyst moving forward just because of the event. There could be some other factors, macroeconomic factors, as well as some other factors when it comes to the industry in itself. But I'm not sure if this is going to be that bull catalyst post-event that's going to really drive the stock higher.
See if we get another, see if we get an engulfing candle here on the 5 minute. Might need to bounce off of get some liquidity on VWAP.
When it last reported results. Yes, Dan Ives would say, well, exclude currency, and it's actually seeing growth. But
you know how the market is. Good earnings can tank, bad earnings can rip.
With quite a few headwinds at this point.
But yeah, the earnings were
Well,
sick.
they do have a diversified business model, so we also have to keep that in mind. And what we have seen is actually their software side, or really the platform side, really selling out. And that's what Dan Ives continues to reiterate. It's not so much the iPhone 15 or the iPhone sales in itself. Yes, that's going to have a little bit of cyclicality. But when you look at the stability when it comes to their software sales, and you have the Apple Store, you have Apple Music, you have Apple TV, those are the areas of the business that continues to grow, and that could actually reduce some of that cyclicality in the this business. So I think that's going to be an area to focus on. And you're right, we are continuing to see revenue declines on a year-over-year basis, on a quarter-over-quarter basis, but the market has been responding very positively to that. In fact, they continue to bid it up, even though the PE in itself is starting to is starting to inflate because of the price movements in the stock and the lack of earning power and revenue power that we've seen in their earnings here. So I think it's going to definitely be platform sales. iPhone 15 and iPhone sales is going to be a big factor, of course, but I think the market is kind of undervaluing the software side of the business.
All right, we'll keep an eye on that services revenue, looking for that double-digit growth. Kevin Green, thanks so much. All right, let's trade it with Dan Deming, managing a partner at KKM Financial. Dan, before we get to your trade, I'm curious about your view on how fairly valued you think Apple is right now.
Well, you know,
Looks
that's
concerned.
a tough call, Caroline, because of some of the dynamics that you and Kevin just brought up. But I think overall, you know, from just the general trends in the market, and when you look at the NASDAQ as a whole, when you look at relative strength, it's still maintaining its relative strength to other sectors of the market, and Apple being a key component of that, and some of the other names that continue to hold on to their gains for the most part. Now, I mean, the thing is Apple's only had a 2-day sell-off here. You know, it came from 190 down to mid 170s, and now it's finding some stability. And today you're looking at an inside day, so much less volatile session and regaining some upside. So I think short term that Apple's still got some further upside. Longer term, Caroline, I still think the metrics of the way the company operates favor further positive price action. But yeah, there's going to be hiccups along the way. And this is, I think, viewed by some market participants as an opportunity here. And that's the way I'm looking at it from a trade example, to capture some upside here on this pullback.
1%. Highs climbing there again.
5.4% pullback this week. Potentially a good buying opportunity. So tell us about this trade.
Yeah, so the trade example today is, kind of a range-bound trade, a short-term trade looking 42 days out, regular October expiration. And what I'm looking at for the trade example today is a call fly. So we're looking at the October expiry, the 180 call, buy one of those, sell 2 190s and buy 1 200. Play for that range back up to the recent highs that we just came off right around that 190 level. Again, I don't think that we're going to see Apple rip off after this announcement on the 15th. But at the same time, I think Kevin brought up a great point. Historically, it's been a buy the rumor, sell the news type of scenario. Apple being sold before this event, I think, sets up more positively for it after the event. And so I think that we could see some stabilization here. Let this news work its way through the system and through the markets, I should say.
October 7 calls?
In the markets, and then I think we'll find some stability and Apple will be able to regain some upside.
3.5.
All right, yeah, median price target on Wall Street of $200 a share, so still some double-digit upside from here.
Above that $6.
Dan, I want to broaden it out and get your view. So you're bullish on Apple. What about the overall market? Can you make the case that this is a market that can continue its rally higher, given how far it's already come and given some of this corrective action that we've been seeing more recently?
Sure. Yeah, I think the case can be made that there's still further upside, particularly if you look at economic activity in the U.S., coupled that with the shifting dynamics in manufacturing that had been declining for the last 6 months. So we're starting to see that slowly bottom out and potentially turn higher. And inflation continues to trend lower. I mean, we did just get some inflation data. Globally, inflation is still a problem, and that could still be a hiccup for the global markets, which are going to impact our markets from a short-term perspective. But I still think that, as the Fed continues to navigate this very difficult environment, they've done a pretty good job so far. And even with oil pushing back up towards the highs, look at RBOB. RBOB is not. So that's passed on the consumer. RBOB's in the middle of its range for the last 3 months, I should say. So again, some of the higher oil costs have not necessarily been passed on to the consumer at this point. And so I think there's dynamics in play here in the economy that continue to benefit the markets longer term. September's a tough time for the market, though. It historically has been. Psychology has been rocked a little bit here on the selling pressure initially. We'll see if we can get an update today to finish out the week.
All right, Dan Deming, managing partner, KKM Financial. Have a great weekend. Thanks so much.
Thank you. You too.
Thanks. Coming up,
Closing
we'll
out
talk
some calls
biotech.
here.
Our next guest says the group is in a biotech winter, and it's one of the worst he's seen. We'll get his outlook next on Morning Trade Live.
Yeah, I close out of my calls. There's a little breakout on SPY. New high on the day. Looked like it was kind of double topping there. Oh well. Might get back in on a bigger pullback, maybe to VWAP. If it breaks VWAP, I'll probably be getting puts for an inverse cup. Yeah, eyes up 3.5. Dish is up 3.5. Alls I have on Dish are pretty far out of the money at this point. Got until January though. One goes down 3.8. Jones down 1.6. Palantir's up 1.5. Rivian. GME hanging out at VWAP down 5.5. Barbecue down 2.8. Below that resistance still. GNS breaking out there at 11.5%. Not bad. Sitting on borrowed shares. Yeah, they don't have to short it right away. That's true. When they buy back those sold shares, though, that's when the stock goes up. When shorts take profits, bullish. It's like when longs take profit, it's bearish. Twelve and a half there on GNS again. It's got a gap at 1190. Is that a legit gap? Yeah, that's a real gap. We'll pop there and GME above VWAP. Only down 5 now. Respect to this resistance line. Pretty well though. Oh, GNS getting to that gap fill. Beyond is down 2.5. High new high of the day there. Run is down 2.3. They still selling shares off on AMC? Gotta be, right? I rip in there still. Dang, should have held a couple. Should have held just a couple runners. I know AMC did a 10 for 1. They wanted the peak of the squeeze to be the same, or close to the same price as GME. Like they were the same. There's a red candle on SPY. Maybe. Open candle maybe on the 5-minute there. GME right back down 6.3 with that SPY candle. Barbecue down 2.4. GNS filled the gap. Did it.
Renita, let's talk Caesars, because it's not just the auto workers that could be going on
Caesars.
strike. There's also
Yeah, engulfing
potential
candle there on the
strike that could be
5-minute.
happening on the Vegas Strip. Fill us in.
So I'm taking a look actually at not just Caesars, but Wynn as well as MGM. These are all higher today, but it's as unions prepare to vote on whether or not they will strike for the citywide workers. Now, the vote will take place on September 26th, and if approved, it could lead to over 50,000 housekeepers, bartenders, and other staff walking off the job. What do they want? Lighter workloads. They want an increase in on-the-job security protection, and of course a wage increase. Now, all properties that are handled by Caesars, Wynn, MGM, as well as the Trump Hotel, Las Vegas, and the Waldorf Astoria could be affected by these actions. When we look at the share price action of all three, MGM is strong. It's up more than 30% year to date. So is Caesars, up more than 30% year to date. Wynn, however, up more than 15% year to date. And just as we talked about right off the top, all three of the stocks that we're talking about today have the same thing in common. There's some sort of labor strife, and it's certainly the time that we see a heightened labor union fight going on nationally.
Yeah, certainly seems to be the case. So, Rick, you're looking at Caesars chart specifically. Caesars shares up about 2.3% today, lower on the week, down about 2%. What stands out to you in terms of the levels on the chart?
Well, the first thing is this red dashed line here, the 55 level. Once we broke above that point, we had a bit of an upside breakout. You can see back here, we stopped at this point many times. You know, back here, here several times, here once again, and here as well. And that's, once again, we look for these sticky price levels because they can result in breakouts to the upside like we had there. We topped out in our yearly highs near 60.27, but this one was not to be. It was, you know, we had a drop off once again. We found some consolidation and support around that 55 level, but we fell through it. Finally, we found support at another important price level, the 51 level. This green dashed line here, that was highs from back here and here. And we can see as well that it lined up pretty neatly with our purple 252-day exponential moving average. So we found some support there.
Was that
we had
Nicole?
another failure to break above that 55
Caroline?
level, and then we have been within
Ubo, yeah, we
that
looked
trend
at it.
line since then here. We can see as well RSI kind of exhibiting this a reflection of this trendless nature.
I mean,
right
it's
near
holding
the
up pretty well.
55 line, or excuse me, the 50
After this
line,
rally from the
a little bit above
dollar.
here, but not really showing a strong lean one way or the other.
Nice
And
inverse
really
head and
you can see
shoulders.
as well, our moving averages all kind of trending sideways, clustered together relatively closely. So, you know, we won't see much in terms of directional movement unless we get a move beyond 55 to the upside or
Not a lot of
51
price
to the
action, man. This
downside.
thing moves.
All right, and finally, Renita, you were talking about those 9 and 16%
Yeah,
raises
maybe a
not
bigger
being enough for GM
inverse head and
and
shoulders
Ford
on the weekly.
employees. Well, it sounds like Walmart employees might appreciate them. It's lowering the pay for some of its workers. Fill us in on that story.
Now, this is an interesting story because
What's up with that
this
chart? I
took
don't know.
effect actually in July, and it's just now becoming widely known. But Walmart decided to cut the pay for some starting workers, and it's those workers who are the personal shoppers. They pick and pack online orders for curbside pickup and delivery to customers' homes. They also stock shelves, and they now make about $1 an hour less than what they would have made if they were hired a few months ago. Now, Walmart said that no current employees in these roles have had their pay cut, and they also said that they adjusted pay bands for more experienced workers, and they saw that as the biggest, one of the criticisms, I should say, that this move is getting is as one of the biggest private employers in the U.S., Walmart, of course, it has 1.6 million employees. This raises questions of whether companies are actually facing a cooling of the labor market or if they're just adjusting to a return to pre-pandemic shopping levels. Walmart also, by the way, said that they hiked their minimum wage for store employees back in January from $12 to $14 an hour. Of course, they will want you to focus on that, not the fact that they are cutting starting employee wages for some of their starting workers.
Yeah, Jeffrey's analysts pointing out that this could mean that employers have the upper hand again. The power has shifted. Rick, what do you see in Walmart's chart?
kind of our theme for today is breakouts beyond clear areas of support or resistance. Same thing happened here. This green dashed line, the 154 level, topped out around that point here. And here we had a breakout beyond that point, and then it became a floor for price. Old resistance became new support. So that was something that we saw exhibited here. We had another push to the upside. 160 was another of these battleground price levels, this red dashed line here. We did push above it, but then earnings threw us for a loop there. We saw a 2.2% one-day drop, this big red candle here. That probably was pretty tough for traders, probably flushed some people out. But then we resumed our climb. Steeper upward sloping trend line here, pushing into new yearly highs, and we're making fresh
GME
ones
down
today
6.5.
as we speak here. And you can see as well
GNS
that
holding
the
11
overall
and a
price
half.
shape, kind of a rising wedge type shape here. Two upward sloping trend lines, one going across the highs, one going across the lows, converging toward each other. RSI was interesting to me, our measure of momentum here. Look how often it topped out right around the 65 level or so. Keep an eye on to see if we can break that trend. If we keep pushing upward here, that
There's
would be a more
VWAP.
bullish sign. Resistance would be the top of our channel right here, near about our wedge, excuse me,
hitting
near about
VWAP there.
165. Then our +1 standard deviation channel gives us a
I gotta
potential
contend with
resistance
VWAP for
target
puts.
near about the 168 level, just a bit below that. For support, right here, we've got a few things to choose from. Around the 160 level, that's our battleground price level that I mentioned, so look for support there. It also lines up pretty much with the 21-day EMA near 160.
All right, Rick, Renita, thank you for those fundamentals and technicals. Always appreciate it. Up next, Jenny Horn has the latest on the SEC investigating Ryan Cohen, and then it's market meetup time. That's next on Morning Trade Live.
Maybe there's
Stay
an
with us.
update
We'll
on
be right
that
back.
investigation. And he wouldn't lie to us. I didn't read the article. I don't have Wall Street Journal. Did you guys read it? Is it the same, like the same one? Always send Jenny with the dirt. Like, everyone likes you, Jenny. You can bear the bad news. You talk about Ryan Cohen and how bad he is. But everybody loves Ryan Cohen. Do it. They love you more. I bounced on VWAP a little bit there. Surprise, surprise. Barbecue down 3. Down 4.5. Yeah, all this volume there. They had to have sold shares that day. Probably yesterday too. See about today. GNS back to VWAP. %3 on Dish. Be down 7. Getting some puts there. Close to VWAP, which I don't like, but it's okay. Thought about getting a months engulfing candle. Had to wait because it look like we're in this kind of buying channel. If we break VWAP, I think we'll be out of it. We're actually getting out of it now. There's VWAP, there's a flush. Nice. Nice. Alright. Want more. I'll just hold these this time. I keep myself from selling any until these low of the day. The inverse cup. But really, we have pre-market low 443.91. I just rips from it. True. Oh wait, the thing.
The stock that it was never able to rebound fully from. And timing was interesting again because we were seeing such a surge in some of these meme stocks, AMC, GameStop, other names come to mind. So will be interesting to see how this plays out, although I will say he was able to skate by on the first lawsuit from federal court.
Yeah, that's true, and really goes to show the power of a moon emoji. Have to say, I literally just threw out a huge stack of Bed Bath & Beyond coupons. RIP to those 20% off coupons. Jenny Horn, thanks so much.
Thanks, Caroline.
All right, it's market meetup time.
We can rewatch that if you guys are interested.
Senior markets correspondent
You can
and
find
Scott
it.
Durfee, senior manager trading and education at Charles Schwab.
Kind of curious
Scott,
on what they actually
George,
said
great to
because
have you both here. George, let's kick things off with
see
you.
if I can find it.
Just
I
want to
think
get
I
a
can.
sense of your take on today's market action. Stocks are attempting to end a pretty wobbly week on an upbeat note, seeing some green aside from the Russell. What do you make of it?
Yeah, I think, look, I think we're in a trading range. If you actually go back to June, Caroline, we're in about a 300-point trading range on the S&P between 43 and 4,600. So with that said, I think there's some opportunities in the marketplace, at least in the short term, especially on the back of the last 2 days with Apple's route to the downside. It was a pretty big move to the downside, and I think overall there's some opportunities that buyers are willing to take to step into this market right now. So I think overall, you have to take what the market's giving us with the volatility in the markets. There's an opportunity, of course, to sell some credit spreads within that trading range. And I think at the end of the day, this month will probably remain volatile, especially as we move into the beginning of next month, considering, again, that we do have the Fed meeting this month, which again, from the standpoint of monetary policy, there's not an expectation of a rate hike. But at the same time, from a fiscal front, this is what I'm looking at as we're moving into the end of this month, beginning of next month. Budget considerations need to be taken into play when it comes down to investing because, again, from a fiscal standpoint, if we have potentially a government shutdown at the beginning of October, that could create some problems. And so I think at the end of the day, the markets are really waiting for some reconciliation on the fiscal front.
Holding above
and
VWAP
with
now.
that
We'll
said, I
see.
think we're going to be volatile until then.
Okay, and we'll look ahead in just a second. But Scott, first, George
I have
says
to stop
trading
out on
range
these.
43 to 4600 for the S&P, so that implies downside or upside. What do you make of this action? Do you think more choppiness is in store, or could you make a case for a market that moves higher from here?
Well, I definitely think that there's more choppiness in store, at least in the very near future. As we continue through September, I believe this is just how September will probably mostly be for us. You know, we had a lot of Fed speak during the week. You know, John Williams actually said on Thursday, yesterday, right, that the U.S. monetary policy is in a quotation marks good place. But he did also stress that officials would be guided by economic data. Now, that's an interesting concept because next week we have CPI coming out. We'll see how that they react. Well, first off, we need to see how CPI will come in. If it comes in hot, will they actually hold, or will they make an unforetold move? The other thing that we need to be concerned about, or at least be considering, is what we've been seeing, you know, from the beige book. You know, the central bank's tightenings kind of pushed borrowing costs relative to incomes to their most that they've been since the global financial crisis. And this high levels caused households a lot of problems in previous cycles. So the beige book comes from the Fed. Hopefully they're paying, and I know that they are paying attention to that, but we'll see how that they react to all of these things. A continued to continue in the way that we are, there is recession, according to the beige book. There is recession potential out there. So in order for us to avoid that, it's going to be important that the Fed stays on top of it.
There certainly is recession potential. There's been so many calls for this recession that really hasn't arrived. But George, when you think about CPI next week and PPI, just the inflation data in general, how market moving do you think that could potentially be given the Fed implications?
Well, I think at the end of the day, I mean, I don't expect core CPI to move too much. And so with that said, I think that corresponds to what the Fed is doing.
Like barbecue bounced up through that resistance
so
briefly.
I think we're sort of stubbornly stuck with core CPI over 4% still. Unless that drops, you know, remarkably compared to the estimates, I don't think it's going to change the market dynamics very much at all. So I think from the inflation standpoint, but also from the standpoint of the federal funds rate, we're going to be at a steady state, at least perhaps until November. We'll have a wait and see kind of approach, like this is what the Fed is talking about with rates relative to inflation. And again, I think at the end of the day, you know, the markets are a little bit toppy from the standpoint of, you know, household economics, which is relatively strained, as Scott alludes to. The economy is still, you know, chugging along. As long as the labor market and productivity is growing, then of course the economy is still growing. But I think the rate of change of economic growth is now, you know, peaking. So with that said, we're also seeing some profitability peaking in the marketplace and some challenges, at least in the near term or intermediate term in the markets. And I think there's going to be volatility as we move into October, perhaps even to November.
Scott, you talked about a Fed member saying monetary policy is in a good place. Do you think it is? Do you think that the next move from the Fed is a hike or a cut? We know September, probably nothing. But the next actual move, will it be a hike or a cut?
Green to red candle.
First question, do I believe that we are in a good economic state?
Got me.
I think in this moment we are in probably as good an economic state given the set of circumstances that we've been surrounded with over the last couple of years. I think that we are in as good an economic state as we could be. Now, to your second question, will they cut or will they hike? I think the next move will probably be a cut. Now, I don't. I'm not willing to bet the house or the farm on that, the ranch, as it were, on that. But we'll see how it goes. You know, and there's some other indications that we need to, you know, considering, right? The S&P 500 consumer discretionary index has rallied nearly 32% so far this year, but it's starting to pull back, right? The broader S&P only gained 16%. So as we see these two things kind of come back together, I think that should be an indication that we should not see more rate hikes. Maybe rate cuts will be in the future. But as you said, that's not going to happen next time.
And And Scott, based on your background, I guess that "won't bet the ranch" actually is a literal comment. George, I do want to ask you, speaking of this economic state that Scott was talking about, we'll also get retail sales next week, which give us further insight into the strength of the consumer. Do you think that this consumer is strong enough to continue propping up the economy, George?
Yeah, I mean, at the end of the day, I know, households are becoming more indebted, and that's a problem. I think wage growth has been a problem. But at the same time, you're looking at the core economic growth from a demographic standpoint and even workforce productivity, that's still embedded in economic growth. So, I mean, relatively balanced, I would say, from a consumer standpoint still. I will say this, that I think from a federal fund standpoint, if interest rates actually stay where they're at versus fall, I think that's the best position for the markets. I think if we start to see rates fall, you have to think about the typical nature of rates falling. It doesn't happen for generally good reasons.
All right, we have to leave it there. Just one last quick look at the market. Dow, NASDAQ, S&P up about 0.3%. Russell essentially flat. George Tillis, Scott Durfee, always a pleasure. Thanks so much. All right, that's a wrap for Morning Trade Live. Stay tuned, though, because up next, it's
wholesale inventories come out at 10.
With Nicole Petalides, and I'll see you back here for Market on Close.
Got Dally speaking at 11. And consumer credit's at 3. Bottom, double bottom there on GME maybe. Can't find that website anymore, that TD Ameritrade, where we can see their program, but they have it ported. They like upload the segments. I tried Charles Schwab, but no luck there. There's the VWAP move on SPY coming below it. That green candle, I gotta let the candles go. Gonna not get shaken out by those candles. Anyways, here we are. MACD flip bearish. Got SPY under the VWAP. First point of contention. Barbecue's green, up 1.3. Oh, slightly above that resistance now. See. Back up to VWAP. It's 11 o'clock. And back above VWAP.
Shares to buy from neutral with a price target of $630 a share, up from $520. So pretty substantial price hike there, saying their enterprise checks were generally healthy and indicative of a much better fiscal fourth quarter for Adobe. They said the company's web traffic has been meaningfully accelerating and they expect good upside to their net new digital media annual recurring revenue and now their third quarter. However, something that they noted in like bold basically was that this is not an upgrade just solely on this earnings moves next week. They actually see this company in a digital transformation and they do see raised confidence on the fact that generative AI has been a significant growth driver for Adobe shares. This name has really taken off ever since it's introduced its new creative suite of AI offerings. We're seeing shares still up around 67% on the year, unchanged week to date. So this move today now pushed it pretty much erasing some of those losses week to date. So all the tech wreckage we've talked about all week long, Adobe is still scathing by relatively unharmed here, well above its 50 and 200-day simple moving averages.
All right, thank you for both of those. Appreciate it. Jenny Horn, markets correspondent. Nice to see you. Thank you. All right, let's get some insights in the news shaping the markets. And for that, we welcome in Rebecca Walzer's here, president of Walzer Wealth Management. Thank you for being
yes,
here.
Thanks for having me, Nicole.
So how are you feeling about the market? We'll get into some of the different specifics, but what jumps out at you now?
I mean, obviously this news of Russia and Saudi Arabia really keeping the cuts going. And, you know, I think that Mohammed bin Salami really wants to see crude at $100 a barrel for the projects that he wants to do economically. So you're really seeing the bloc, OPEC Plus, clamp down and say,
Brian will have to buy back barbecue stock.
Globally because manufacturing
He's going to be steady.
You know, dropping, Nicole.
By that
We're going to keep it artificially inflated.
You think
because
the court ruling?
I mean, that's definitely at least
They're going to force him to buy it back. Force the thesis of the barbecue bulls to come true.
Pulled back, I think, a little bit yesterday, but you know, 90 is right there.
Right, exactly.
To your point. But, you know, that'll be an inflationary pressure that will translate at the gasoline pump.
Exactly.
In the meantime, the labor picture, we know
Dude, SPY back above VWAP now.
But what are you thinking? I mean, what is the Fed watching now?
The day chop
what
sucks.
will they do in September?
Well, I think we're going to get a pause in September, Nicole, and I think but I do still look at Powell's comments in Jackson Hole as very hawkish, and obviously he's really relied on the stalwart of labor to be able to do these aggressive raises, and now we're starting to see a labor picture that is softening. We're not seeing as many job openings, that's decline. We're actually not seeing the same wage growth that we're seeing for the people that are out there that are returning. We're actually seeing labor force participation going back up, and what that tells us, Nicole, is that savings are running out and credit cards are getting tapped out, and people are done with stimulus and they actually have to get back into labor force. So participation rate going up is actually why it ticked up on the inflation number.
Yeah, that's right. I mean, you have young people out there trying to look for jobs. And if they have credit card debt, it's upwards of 20%, right? We said that's over $1 trillion.
Exactly.
People are really digging into savings, using credit cards, even hardship for the 401ks.
And Nicole, now we have $5 billion that's coming next month in student debts, restarting. That's $5 billion a month that is not going to be able to sit on services and retail goods. So that is going to be an additional. And of course, you know, the Fed is also rolling off $95 billion a month by letting MBSs and treasuries mature without replacing them. So we've got a lot of liquidity crunches coming.
So at this point now, do you think that the Fed? So if you think the Fed skips in September, what about November?
I think the October 31, November 1 meeting, I think we're going to see another raise, unfortunately. But unless, barring some tragic economic news between now and October 31, I see Powell's comments as indicating that there's not enough consensus to keep the pause. And we are going to have higher for longer. That's in the parlance now. That's what we're talking.
Let's get to some specific sort of stories. I mean, you don't have to necessarily comment on the stocks, but I mean, we've had Apple under pressure, you know, down over 6% this week, right? I'll have to double check on the latest number. But, you know, government there in China. At first it was don't bring your Apple to the meetings, and then it was no government buildings, no Apple anywhere, you know, leave it home. Nobody's going to have an Apple iPhone anymore if they're not allowed to use it.
Exactly.
What do you think what's going on here in tech in a name like Apple?
You know, it's obviously retaliatory. It's interesting that it took so long for Huawei to actually, you know, and for China to crack down on Apple, similar stance to what Trump did with Huawei. And I believe this is a complete retaliation. It's also some things going on with Foxconn and Apple in China, diversifying supply chains, building a 200 million facility in India to create, you know, AirPods. You know, even though their joint venture just really kind of fell through with the chips, we know that they're trying to diversify from China. So that doesn't make China Apple's biggest fan right now, Nicole. And that's really what's happening is diversification away from China and supply chain diversification.
Yeah, and with Apple, I was looking to see where it was. I mean, it was at 177 when I looked earlier this morning. Right now it's at 178. And some would say, you know, it was 198.
I know. I know.
Not that long ago, in the middle of July. So when you see these kinds of pullbacks on Apple or any of the other names, do you say, and look, we're going ahead of the iPhone 15 launch. But sometimes there's actually selling on the news on the Apple day. But do you buy on these pullbacks?
Well, you know, it's interesting with Apple. I think it's a really unique case because China has been their growth projection for the last several years, China and India. So if you're seeing China really come hard against iPhone and Apple, then you've got Apple saying, wow, this could be a strategy play that we haven't anticipated.
Are those hair extensions?
We're going to have to redivest and adjust. And they're not prepared for that because Apple is definitely has looked at China as their growth trajectory. So I think it's hitting Apple especially hard, Nicole, because of that specific reason. reason.
So what do you tell folks when they want to put some money to work, or are you telling them to take some profits?
I mean, I do still think that we're overpriced right now, and I do still see an economic pullback, Nicole. I just don't think we're going to get out of this without a lot of problems. But I certainly, if we have, you know, movers and shakers that are underpriced, and then we see a move on, we can definitely take that move. But macroeconomically, in the next 6 months, I see a lot of volatility, and I really think we're going to buckle up our seatbelts.
Yeah, I was at an event last night and talking to one of the money managers, and he said, we just put so many hedges on the bets that we're making.
Exactly.
I mean, are you finding that?
I mean, that's exactly it. The only way I think to play equities is right now is with stop losses, is with hedges, is with options, because we just don't know when this could come, right? We're expecting some kind of economic disruption, and it could come any moment from anywhere. Geopolitical risk escalation, BRICS announcement of selling crude outside of US dollars January 2024. I mean, anything could be coming that could really disrupt this very fragile and very narrow recovery. I mean, if you look at the S&P, if you look at NASDAQ, if you look at, it's not that many, Nicole. It's not broad-based and deep. It's very few players that are really performing well.
Yeah, it's great to see you, Rebecca.
Thank you
so much for being here. Rebecca Walter, Walter Wealth Management. All right, plenty more to come here on Trading 360. Now, next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Mike Shore takes us through the trades for Carvana, Devon Energy, and Fortinet. Next on Trading 360 on Schwab Network.
Okay, bye-bye. I think your puts might still work. Just didn't get good timing. But I'm not too sure now with that green candle. That's that midday chop. The catastrophe. What is it brought GME up above BBBYQ? 5.5. 5.5% down. Barbecue hanging around break even. Still a head and shoulders on here. Kind of the right shoulder right here. Wow, Dish kept going. 4 1/4 now. Kitty Daddy's got it. That's right, man. GNS holding above you up. 7%. Groupon's up 5.5. Look at how this thing's held, man. These have been really surprising to me. When the market was bearish and they were coming down, I'm like, wow, these are just gonna keep going. Now they're up 300% from those levels. Just casually been holding that for weeks. Carvana's doing it. Crazy. I averaged in a little bit to my puts there. Just with one more contract. Head and shoulder still playing. My MACD is still showing it. We're just enduring the midday chop now. Unless if we break this right shoulder. Wouldn't be good. Might cut losses then. I want to here, it's definitely like a high. Ish, 4.5%. Overstock. Green Day. Never got filled. I was trying to get filled yesterday on a position. Same with the IEP. They're both up out today. Oh well, it's one day. Eyes looking kind of bullish.
Identified that as a key area to watch. Still holding above it right now, but you can also see areas of value that have formed at lower levels here right now. 63 off the $67 high from back
I've got about 10 minutes to Euro close.
Lows around 44,
appreciate you guys' support today. Thank you for your thumbs ups.
Basically value forming
15 on the morning.
6-7 months here now around that $50
We're into the midday
and
chop.
you can also see a series of lower highs coming into play, a bit of a contraction.
GNS get kind of excited over here above VWAP.
Right now, taking a step back and showing you where we are in the bigger picture here. Again, a similar pattern in terms of that longer-term trend to the downside. I'm going all the way back to the fall of last year. We're talking up around 77, and you can
Barbie
see
is up 2%.
four very well-defined areas
The
of
high of the day there.
Downside. You can also, in this instance, see the significance of the recent failed test here up around this $54, $55 level, a level that we've tested few times here now prior to the recent failed attempt here. The Bears want to see this thing roll back over.
If it catches resistance at 23.88.
Up a door for retest of the lower extreme.
A break of that would be pretty bullish.
Saw this year again, that coincides with the $44, $45 level, we'll call it. Let me show you where we are relative to the 50, the 200-day moving average, so you can get an idea of the struggles that this stock has been under in terms of, you can see how we're kind of teetering.
Still early in the day.
For the most part, just recently kind of inching our way
back. What, is 15 good for pre-EU close?
Headwinds of the 200-day.
I don't feel like that's good, but I don't know. I haven't been keeping track very well lately.
55. So struggling here, longer-term trend to the downside, just recently failing.
There's a likes to viewer ratio.
Keep an eye on that 200-day moving average if we were to get back into that area. That's what the bulls want to see us get above, but still
I don't like
having
it.
a hard time to take out some key resistance here.
Yeah, for a long time stuck between that 50-day and 200-day moving average and just trying to get up there, but can't quite do it. And by the way, just because I noticed one, I have to say the other. Devon is down 13% this year. The only reason I'm saying that is because Carvana, we were talking about it,
talk about it.
Up almost 900% this year. I mean,
exactly.
Looking at the charts, and we get into the chart moves and patterns.
How is this one casually holding 900% gains?
Talking about the big picture, I mean, that's huge. Final thoughts on Devon and then Fortinet. Mike, please.
Yeah, I'm just happy Ben and I are 2 for 2, so let's keep going.
Okay, go for it. Fortinet.
Yeah, so, I tried to get into something for everybody, sideways, down, and now a bullish play. So, I mean, these cybersecurity stocks, earnings, if they didn't have earnings, if they didn't report earnings, it seems like these things would just continue to go up. But, I mean, you see things like Net and all of these cybersecurity stocks, they just get demolished on earnings. So, Fortinet did that too. Consolidated down after that, and now we've broken out of that consolidation range, and you got a huge gap to fill here. So where I was saying that taking these breakouts is kind of dangerous. I mean a breakout to new highs, newer highs. These are levels we haven't seen in quite a while, and so we got a big huge gap to fill here. It's actually doing okay today. It's up about
Square down 5%.
And
breaking through that trend too.
Straight vertical spread about halfway
Not
through
good
that
for
gap.
Square.
I mean, I don't think that it's going to necessarily fill the gap in one day, but that is a nice reward to risk. You don't have a whole lot of downside in this one. Before
yeah, because you did have that big gap down, and now working to fill that gap going back up. Understood. Your thoughts, Ben, on this chart?
a textbook example of the two phases of price development that I look for. Nicole, my eye was immediately drawn to exactly what was just pointed out. And again, in terms of the weakness as far as the
What's the news on Square?
Earnings, but in terms of the bulls case here, we did hold above a key
Oh,
area.
service outages?
Let's just first and foremost begin again with those
Not a
two
reason to
phases
sell
of
off.
development. You've got the horizontal consolidation phase. You're seeing overlapping rotational price activity, not a lot of conviction, into the event where you get the news and you get that imbalance which is created, and then we go back into this sideways horizontal phase. Now, what I'm looking at here is these levels here that we've traded right back up to this $63, $64 level. Kind of coincides with the areas that we saw, significant areas that established themselves as the dust was starting to settle from the initial move. Now, we're talking about a 5-minute candle chart, an hourly candle chart here, and a reaction to news. So I don't want to get too focused on this more intermediate time frame, but
yeah, massive head and shoulders on Square on the monthly chart.
Picture in terms of the time frame as far
it
as
just broke through that
charts, what we're looking at here,
support.
going back to the beginning of January, we've got a low around 45, and then recently up to this $81 level, but
breaking out to the upside a little bit here.
Middle of the range, right? You have a high conviction lead up into earnings, the disappointing news, that imbalance we just talked about, but you can also see how we were unable to take out lows again from earlier this year. So that is the bull case scenario here, and the best case scenario, the fact that the news, the imbalance that was created, was somewhat limited in terms of its ability to follow through at this point, but still also limited in terms of rejection off this lower level. I did go take a look at the longer term chart though, giving the benefit of the doubt to the bulls, the fact that we were created the imbalance but unable to take out lows from earlier this year. I think that sort of feeds into this narrative in terms of what we've been seeing.
Good as long as you like.
Value's been forming at higher and higher levels. And
I like the lurker.
we just recently have been able to hold and get back up above 61. That's the pivot right now. Strength here at this point. If we could regain composure here, work our way back through that gap that Mike was talking about, it opens up a door for a retest of the upper extreme of this range that we've been in. This goes all the way back to the spring of 2021, Nicole, and it's 81. This is exactly what the bulls are looking for here right now. Strength and then a retest of the upper extreme.
Right, understood. All right, thank you for all of that, Ben. Great charts all week long. Really appreciate the big three.
Yeah, Liechtenstein really nailing the charts.
Next week is going to be telling, and so I think we're in a holding pattern until then. So buy what you see what's cheap and sell what you think is expensive, and probably you'll be okay for about the next few days. And then things can dramatically change either way. I wouldn't be surprised either way.
Right. And look, the VIX pulled back today. It shows people are just taking a little breather at this moment. Mike Shore, Ben Liechtenstein on the Big Three this Friday. Really appreciate it. All right, coming up next, we're going to spotlight Live One. The music and entertainment platform has spun off its podcast company, Podcast One.
Live One.
Details next.
The Live One? Hey, Dink.
I was born on the south side of Chicago.
Error. GME, VWAP, 6% down. Hawaiian's up 2%. Aloha. Space is down another 3.8%. If we get a bounce on this level down here. I want to see another space flight. Alright, sending out a trade for the Theta Farm members on the YouTubes. Opened up a position today. Not too crazy. I'm melting up a little more. Midday chop. I'll read this article on Reuters about Ryan Cohen. If there's anything new. It was out yesterday. SEC is investigating Ryan Cohen's ownership and surprise sale by Beth Beyond shares. Oh, this is Reuters reporting on what Wall Street Journal's reported. One of those. Little reporting on what they're reporting. The SEC has requested information from Cohen about his trades and his communications with officers or directors at home goods retailer, the report said. Citing people familiar with the matter. They're actually citing Wall Street Journal, which was citing people familiar with the matter. Who knows what they're citing? Anyways, I'll continue. The regulator has also sought records from some of the company's current and former board members. Barbecue and SEC did not immediately respond to Reuters' request for comment. Cohen could not be immediately reached for comment. Cohen is chairman at GME, had disclosed a near 10% stake. Who's currently chairman at GME, had disclosed a nearly 10% stake in Barbecue in March 2022, and wanted the company to explore strategic alternatives that include a full sale. Buys climbing back up here, see if we get a double top. The same month, Bed Bath & Beyond and Cohen reached a settlement to add 3 new directors to the company's board, and the retailers agreed to look for alternatives for its Buy Buy Baby unit. However, in August, a regulatory filing showed that Cohen had exited his position in the company following a stunning rally during the month. In April, Bed Bath & Beyond filed Chapter 11. That's the end of the article. Yeah, this is just something they had on deck. This is just the last dirt they could find on Ryan Cohen. GME started dropping. They don't have an explanation, so they just pump out this article. It's literally, there's nothing. It's the exact same thing. Nothing new. See if some other articles have more. Nope. One doesn't either. Let's see. What? That happens. News gets regurgitated, and you actually get a reaction again from it too. but this is a cover up. All right, there's a little double top. Can't average in anymore. I can't average in anymore. I'm already averaged in. Barbecue right around the resistance, so I'm happy to be out of it though. Point. Ubo down 4. Buy. Near the high. Been fast down 4. I saw a post of a guy that what was it, call credit spreads I think on VinFast. Put it on options, I view is crazy. I guess the call credit spread would have been the way to go, honestly. It's not a bad idea. I was trying to short it, but it's like unshortable, it's weird. Barbecue holding that little gain, 1% up. SPY double topping or cup and handling. You never know until you see the handle form. BlackBerry down to the 3.7. What was this on again? Preliminary revenue miss. Wait, did they have earnings or not? With Webull, and their earnings are off. Double top in there, it looks like. We'll know if we break VWAP, most likely. GME down almost 7. Once more. Howdy, Macaron. Last 3 trading days before the big unveil, huh? This is so exciting. Expert market. How come Cost hasn't had earnings? Doesn't seem good. I come in below VWAP there. And still above VWAP. I'm bouncing off VWAP. Midday chop. Barbecue's up 2%. Back above those resistances. Back in this trading range, so looking good. Looks like it's still in that trend.
Businesses, and that's what we think is going to happen going forward.
So glad you were both on today. An important topic we covered a lot in this because it's not just the food, right? It's so much in the space. Arun Sundaram, CFRA, Scott Mushkin, R5 Capital. Thank you both for being with me. That's going to do it for us here on Trading 360. I'm Nicole Petalides, and I will see you later at 2 p.m. Eastern Time for the watch list. Keep it right here. Fast Market is next.
Oh, Etsy's really selling off here, huh? Buy back below VWAP. Might lose power. Who's on this? Hi, coming down here. If it breaks this low. Nice little double top there. See if we can hit 444 today. That'd be neat. Josh, you and me are the same height. That is neat. Okay, so now another alert to the Theta Farm members. Open up another one. Afternoon, Jay. Little bouncer on that level. Buy back up to view up almost. Still chop.
In the overall equity market here, with some of the other asset classes kind of pushing against any bullish optimism?
I think it really comes down to kind of a yield story. I think once we get above that, once we got above the 4.2
Oh my gosh.
range of the 10-year up to 4.25, that's the range. You know, I think we can go all the way up to 4.3.
Buy orders for GME. What's your target?
In the 10-year before we start seeing some heavy selling again. It's going to be a range-bound trade. You're going to see the equity markets kind of follow what you're seeing on the fixed income side, just because of the weight of that
1511 average in GNS.
You know, it really is just
Follow happy money.
in the markets right now.
This is the way.
You mentioned some of the other things at play, whether that's the dollar, whether that's crude. You know, those are headwinds. But yeah, you know, as Kevin has mentioned, look, the markets have stayed fairly resilient, you know, within these kind of pockets of weakness. I just look at this as a market that's trying to find its way into consolidating.
Holy crap, I'm definitely lose power.
Within a range for a while until we really start taking that 50-day moving average up again and consistently hold it. We got it above it a little bit last week, kind of pulled back, and here we are just trading range bound. You know, what's the next catalyst? That one's going to be difficult to determine, but right now it does seem like the market's trading off of rates.
Yeah, and Joe's, you know, focused on yields here, Kevin. I'm focused on the dollar. This is the 8th straight week of gains for the dollar. And I don't think we've equated it to maybe the multinationals that rely on overseas sales as much as maybe we should put that emphasis on there. It kind of gets washed away in their earnings reports because they'll report earnings and then they'll say on a constant currency type of thing. But this is a pretty strong rebound over the last 2 months here in the dollar, and that's going to maybe cause some reaction to earnings next quarter.
Pocket eights now.
Well, the real short answer is you're both right, because you know the dollar's higher and yields are higher, and if you look at the charts, there's a reason that stocks have struggled up here is because both those have moved fairly sharply. Now yields have become a little more choppy, right? They've come off their highs, and though they've recovered back, it's not all the way. But you're right, the dollar is another problem, and the other concern is crude. You know, there's the three things we pound on just about every day on this show, triggering the market.
Bouncing on that level.
Crude oil's going to start showing up places, right? I mean, you know, the market should be concerned about next week's inflation data because that crude oil that's moved up so significantly didn't really show up in last month's CPI, only very slightly. It could be a much bigger number this time.
Yeah.
So I think all those things, all those three together, I think we're recovering today because the dollar and yields are quiet today. And that gives us on Friday a little bit of relief here. But
yeah, you mentioned
could he
oil,
have?
Kevin. I think people forget that it affects everything. We've already heard it from the airlines. Have already come out, lowered expectations.
We knew that was
because
coming.
Why did he call there? He must have had a 5.
But I think you have to take into context that crude oil will touch everything, especially supply chain costs and everything else. We got crude chart right there. Yeah, we're back at near 10-month highs here in crude oil, and that definitely going to cause some issues for the Fed moving forward. Joe, but when you look at the VIX and the moves that we've seen in equities, the slight pullback that we've seen this week, I mean, we're under 14 on the VIX, so all the concerns that we're talking about here for equities, I mean, the market's not reflective of it. Now, that being said, on Fridays, typically we see some mean reversion on that VIX, and it pulls back a little bit ahead of a weekend. But I mean, give me your take here, where the uncertainty might be out there in the market, but it's not being reflected by options traders.
Well, if you look at the VVIX last week, right, the volatility on the
VIX, back up to VWAP.
Quite a bit heading into
back above
the
VWAP.
weekend, and that makes sense, right? You get a Labor Day weekend, people want to hold the volatility, the additional time premium over the weekend. So you start to see that crater really occur last week. As it's pulled back, it's shown that maybe investors aren't as willing to hedge at these levels, and the reason is just because even though it probably does make sense, with when you see the upcoming events that we have, whether it's we're still talking about the budget debate, whether we're talking about October earnings, all the things that could provide some volatility coming up. Hedging just hasn't really paid off. And I think what investors
What happens when you're in a choppy market?
Look at money flows, you're really starting to see now U.S. equity funds are really starting to see some outflows. It's the 6th consecutive week that we've seen outflows. And where's that money going? Well, a lot of that money is going into money markets. Money markets drew in about $32 billion worth of inflows in the last week. And right now, the market has competition. It has competition with cash. When, the things that we've talked about in the last couple of weeks, guys, when we look at the earnings yield, which is the inverse of the price earnings multiple, when you look at the earnings yield trading below cash, boy, it's an alternative for a lot of investors right now.
Yeah. When you look at upcoming data, Kevin, next week you mentioned the CPI that we've got, PPI, consumer sentiment, retail sales next week too. See how healthy the consumer is. But what sticks out to you over the next several weeks that investors should be focused on? Is it, the potential of the October 1st deadline where maybe the government shuts down? Is it the Fed meeting on the 19th and 20th of this month? Is it the start of earnings season, or is it all of them?
Make sure that our viewers understand a government shutdown is different than defaulting on the debt.
Right.
Not the same animal. Right. And the history of government shutdowns, which I think, remember when we were talking about defaulting on the debt, we were on the show going, there's no way they're going to do it. And it turns out they didn't.
Well, melting
There's
back
a real
up.
good chance they could shut the government down.
Right.
That's a much, much higher probability. Could that cause problems with the market? Yeah, it could. Probably shouldn't, because no one really misses a paycheck. Everyone gets their money back, but that could be something that rattles the markets a bit. Then economic data,
the 7th.
that seems to be turning back up. ISM data, the unit labor cost data this week, both way too high for a market that should be coming down. So I think the real risk here is reigniting inflation.
Rallying.
Government shutdown, yeah, it's out there, but it's more, they'll be screaming at each other, but that doesn't really hurt anything.
Yeah.
It's the reigniting inflation that's a risk.
Right. And Joe, same question to you. I mean, I think it's kind of written, by the CME FedWatch tool that we're not going to get a hike at that September meeting on the 20th, but at the same time, maybe the rhetoric's going to be really hawkish. Maybe it should be, to Kevin's point about maybe inflation reigniting.
So I will say this, guys. I think one thing that's helped the Fed's case has been, there has been some tightening recently. And just look at what's happened with oil prices. Look what's happened with the dollar. That actually tightens, that money supply, right? Because there's less disposable income out there for the consumer. So while we worry about the consumer, I think this actually helps the Fed's case a little bit.
Market 2 is now 7th.
in September, but maybe have a chance to kind of recollect their thoughts before anything occurs in November. Now we do get CPI and PPI next week, so those will be some indicators that they'll be looking at, and there's a few more reports that'll come out before November. But we actually have started to see some of that tightening in the market, just due to some of the inflationary concerns that you're talking about, whether it's crude oil or whether it's the dollar kind of putting pressure on the overall markets. That's helped the Fed's case.
Got it. Good discussion here on that. I think there's going to be a lot of catalysts moving over the next couple weeks.
And September is, not the most bullish month to begin with, as some of the Schwab data points out real clearly. It's historically not a very bullish month.
Yep, one of the weaker out of the 12. All right, let's take a quick break, guys. We're going to get into discussions about the chip space. We're going to take a look at Intel. Chip makers rallied over 4% so far this week, and maybe benefiting from some of the geopolitical tensions that are out there between China and the U.S. Fast Markets coming right back.
Jeez. These blinds are crazy. Oh, I'm slow playing this for sure. Wait, raised? Oof. Got lucky there. Consolidation on SPY.
Here. Shares are up about 25% from year-ago levels, up 44% this year. Kevin, the stock's hitting 52-week highs today, and I was telling you when we were off camera, I looked at the stock yesterday. It was one of the green ones on the visual here as far as the heat map goes. And I'm like, what the heck is Intel doing up when the market's down? But there's a lot of reasoning behind this.
Remember, they are a U.S.-based chip producer.
Fab.
Yes, and if there's tensions between the U.S. and China, if some of those relationships are strained, the beneficiary might be, could be, probably will be Intel. And, everyone talks about AMD's killing Intel in terms of market share. AMD went from 18% to 35%. Intel went from 82 to 65. They still got 60. They still got double AMD in terms of market share. So they're still massive. They've made several missteps along the way, but they could benefit from international tensions because they're U.S. based.
Yeah, Joe, give me your take here. 52-week highs for this stock. It's probably based on the fact that these geopolitical tensions are causing, maybe some people to look back at Intel because, in 2022, this was one of the worst performers in the tech space. But Pat Gelsinger, the CEO, has got a turnaround plan. They're getting into AI slower than NVIDIA and AMD. But, this one's been doing well this week and so far this year.
I mean, look, if you look at how this stock has performed relative, to the stocks, it's up 47% year to date. The stocks is up 42%, and a lot of that gain has come within the last month. I mean, Intel's just had some relative strength, some outperformance relative to its peers, and as you guys kind of mentioned, I think part of that can be attributed to the China tensions and people wanting maybe to look domestically for that chip production. Pat Gelsinger, came out about a week or two ago and said that they believe that they're moving towards above third quarter targets in terms of revenue. So he came and gave some guidance that beat the street's expectations, and the stock's really profited since, or investors have profited since for owning the stock. I think going forward, if you look at where the stock has had some issues, it's been around that $37, and yesterday we broke right through that, also some pretty decent volume. Traded up today, hit a 52-week high, meandering around a little bit now. It's kind of pulled back from some of the strength that it saw. But, it could be a decent entry point right around that $37 level if you can get it for the stock, because that old resistance might be new support going forward. It's been a while since we've seen anything like this in the stock, and if you look at the fact that it's at its highest level since July 2022, and now up 10 straight days. If we can hold some gains, get back up on the day, the stock has some momentum behind it.
Yeah, especially if the overall tech sector, NASDAQ, reverses, that might also lend some support to a stock that's outperformed the sector over the last couple of weeks here. But Joe, you got an example trade for us here in Intel. Break it down for us.
Yeah, sure. So I think there's two ways to look at this. There's really two components to this trade. There's the sale of a put and then the buy of a call spread. I talked about that 37 level, so I'm looking at the October 20th expiration, selling the 37 put. Some people might say that's enough of the trade to do it right there. You're collecting about 3% selling that put on the 37 strike, and if the stock settles below
I still have
37 on October 20th,
got it for a whole quarter.
You're taking on 100 shares of that stock for every one that you do. Now, what I was looking at was saying, okay, if as a trader, you're comfortable owning the shares down at 37, but you want to have the ability to potentially participate on some upside should the stock continue to go up, what can I allocate to this trade that would allow something like that? Well, basically by adding a call vertical, by buying a call vertical on the October 20th, 39.42 call vertical, components together, you can do that for about a 15-cent credit. So I sell the 37 puts to buy the 39.42 call vertical. It gives you the potential to make some upside. Should we push back up towards that 42 level, that's where the thing is going to get capped. Gives you the ability to make that spread right between the 39 and the 42. So that's $3 plus the 15 cents that you're taking
still in this range, man.
That's your upside. That's your $315 upside. Your break even is going to be your short put strike minus the 15 cents credit that you take in. So it's going to be around 36.85. And the real risk is should Intel go to zero, right? You're short that put, so you're long 100 shares all the way down. But this as opposed to just selling the put gives you the ability to participate in some upside. And it does this prior to the earnings. So the earnings come out on, I believe they come out on October 26th. That's where it's stating right now. And so this would have already rolled off by that time.
All right, let's break down this example trade. Joe brought us here. We got the risk profile up here. October 20th monthly cycle, so 42 days till expiration. Selling the October 37 strike put, selling a cash secured put, that's neutral to bullish. And then with that, buying the 39 call, selling the 42 call on that. So buying a $3 wide bullish call vertical along with selling that cash secured put. 15-cent credit, that takes your break even, as Joe mentioned, down to $36.85. Your risk, $3,685, as Joe mentioned, if the stock went to zero. But between that 37 strike, Kevin, and the 39 strike, you still get to keep that credit that you collected, and you've got a cushion of nearly $1.50 to get to that break even on this trade.
Yeah,
and way better cards
than
me.
Our viewers saw what Joe just did here. He talked about the 37 strike and then set up his short put at the 37 strike. Right. So that's where he'd buy it, is just below that level. And then the kicker,
break
that's
even
one
there.
trade. That's a bullish enough play if you care for that trade. But then he took that
GNS
credit
broke
and
out
used
again,
it to
huh?
finance the
$1.30.
long call vertical that gives you more upside.
18%.
So you know, remember the assumption is you're bullish in Intel going forward.
Support there.
That's the key here. But you know,
That's
I
our
love doing
resistance.
things for credits.
$1.30.
Yeah, I mean,
Buy come back down to
that's
VWAP.
that's the thing with this
I've
type of
mentioned
strategy.
17, 18
You got
gap
to
from
comfortable
GME.
owning
We'll
the
see.
shares if it goes below 37.
The assumption is
Someone else
bullish.
mentioned
Yep,
it.
then the
Just
assumption is bullish.
earned.
So you'd
Yeah,
own
17,
it at a
18.
cheaper price.
No, I
But
think
even if
GME's
it
coming
doesn't
down
go
for
below
sure.
that
It's
37,
rejected
you're
this
still
resistance line,
profitable
so
on this. Now,
at the very
between
least,
39
retest
and
of 16
42,
here.
the profitability tops out at about
But most likely
$315
it'd drop below
above
that.
42
This is really just
over the next
consolidation
month and a half,
on a longer
6
time
weeks
frame.
or so on
In a
this
downtrend.
trade. But
Got
a good look
downtrend.
at an example
It
here
bounces.
where you're financing a bullish play.
The only
with
variable
a
was
neutral
earnings,
to bullish type
which
play
didn't
on
do
this
anything.
one. Joe, any
But we're still in
final
this
thoughts on
downtrend.
this type of strategy?
I think it's an interesting
Back on the
strategy when
weekly.
you kind of had a breakout and you're looking to see if it tests
Unclear.
that area again.
Dropping
and you're
down,
trying to
down,
determine where
consolidating.
You want to get long. I think it's a strategy that allows you to participate in the upside. Because that's
Yeah.
one of the things that we hear, Tom, is that
Bear
people say, well, I
flagging.
don't like selling
Long
puts
time
because
frame.
I forego all the upside. Well, if you can do that put and use that put as a way to finance
Ooh,
buying some of that
1540
upside, and as Kevin
level
mentioned,
could be
hey, you're collecting a credit, you get paid to do it. I think it makes sense in this scenario.
Yeah, and it works, I think, as Joe mentioned,
Finger.
if you think it's going to break
And a lot
out,
of
which
false
it already has
finger
broken
popping
out
claims.
from a recent resistant level,
All right, there's something.
resistance
10%.
level at this point, or
Bad.
in a market or a stock maybe that's pulled back and you want to kind of get into it, but still give yourself maybe a cushion. But good look at that three-legged spread
Ticker's
there
down too.
in Intel. Thanks to Joe Mazzola, Director of Trading and Education at Charles Schwab, for joining us. But coming up after the break, Kevin and I are going to be joined by Megan Brantley from Likefolio for a discussion on AMD.
Gosh, dang it.
Intel's biggest
Buy back to
competitor,
VWAP.
and the data on the stock.
Stop.
The chip maker's fallen about 18% since hitting 52-week highs in June, but still up significantly on the year. Stick around. Coming right back.
Buy below VWAP now. See if we can complete this inverse cup. Oh, Spades got there. Hoping for a dud. Jeez, I just ran all in. I did not mean to. Oh, this guy's got spades. Dang it. Been a slow played. What the heck? Both of them? Both have kings. Wee! Oh, a 7 came out. I would have won. Oh well. I would have won the whole tournament right there. That's crazy. You're gonna both have that one. That's crazy. I went down to test this level yet again. I just leave. Same with GME. Look at GME's price action compared to SPY. I gotta slow play this. Just don't want diamonds. Dang it. Always. Too early to be going all in. Whoops. Lines aren't big enough. Alright. Pocket aces. Is that even a slow play? The heck? Called me? Get a queen? I mean, it's kind of a slow play, I guess. Bit of a slow. SPY still, it's too early for SPY to make its move. Gotta continue to build liquidity and piss off day traders. Wait till 2. Unlucky with him having that queen. Finally time SPY. Probably not. It's only 12:30.
They have a potential to gain market share on NVIDIA in GPUs for AI. It's pretty good prospects going forward.
Yeah, and you know, Megan, to the point that I mentioned earlier, the stock's still up 66, 67% this year, but it's pulled back about 18, 19%. When you guys look at your data here, I know they don't have earnings for a couple months here. Are you guys positive on this one?
So I will say, you know, we have two different scores that we like to look at. We have our earnings score, which is more of a short-term lens, and then we also have a long-term score.
You realize,
and our earnings score is pretty
seems like you usually
right
buy your
now
options in the
AMC,
first like 10 minutes.
You know, but we do see on a long-term perspective,
your IV is much higher in the first
our long-term score is shifting more bullish. I think it's about a
hour
24 right now.
or more,
So
depending on,
for
of course,
us,
the
that's in
market, but
camp.
you're
So
definitely paying a
this is one
premium.
that we're watching, and we've got some time ahead of
every time
earnings
you buy
to
those
kind of play,
options.
but
If
we
you're not
do
planning
like
on
this,
just
especially
scalping
on a
them,
pullback, as you mentioned, and we like the long-term
you
prospects
basically
and the
have to have
long-term
a
macro trends that are powering
have to have
this,
a
and the
move
way that
in the right
AMD
direction
appears to be
right from
leaning
the
into
gate.
AI and also into its data center, and we saw how that
You're not giving
transformed
any
NVIDIA. So this will be a
any
fun
sort
one
of
to watch play
room
out.
for
All right, great stuff. Great
consolidation
data, as
or going
always,
the wrong
Megan.
direction.
Appreciate it. Have a great day. Have a great weekend.
Thanks, guys. You too.
Yeah, all right. Thanks to Megan Brantley. She's Vice
You know what I
President
mean?
of Research at Likefolio.
So even if
breaking
it
down
goes
the
in the
data
right
for us.
direction for you,
Kevin, you know,
you could still
besides
wait.
that, Lisa Su, pretty good CEO, pretty good
You
track
got puts
record over
because
the
you always
last
get
couple of
puts.
years. She
You
seems to
still
say
wait
all the
for it
right
to go
things,
down
but
and
this
have a
stock's pulled
bounce.
back
And even
a
after
little
that bounce,
bit
it'll probably be
from
cheaper than if you got it.
post-earnings just about a
You
month
normally would get
ago.
it straight out of the gate.
And we've seen that 18% pullback in the last 3 months.
Yeah, and
Oh, he's trying to put me
the
on.
current IV percentile,
Green Ace?
zero right now.
Oh.
So sitting on lows in terms of implied volatility,
Oh, 'cause he
that's
folded.
one of the factors in
You're saying you're
today's,
paying a premium in the morning
paper
volatility.
money trade in Intel, because what I did, I wanted to do something, you know, moderately higher. I looked at the
Assuming you know that,
115
but
calendar spread,
because
and you
the
can
puts
do,
I got, I'm only
obviously,
down
the 1 week calendar
like break even
spread,
on them.
but
I've been sitting on
if
these
you
all day.
wanna add Vega, which
Like down
means if you
1%.
wanna trade Vega,
And I bought
buy
these like way
low
back
and
here,
sell high,
but it was after that
this
first
is an opportunity to add some
hour or
Vega to
so.
this.
And I didn't, of course, I've been
when
sitting through
this
all this chop.
things start to heat up a little bit, you can make money by buying low implied volatility. And so
Even when it's up
what
here, I
did,
was down
Tom,
maybe
I
40%,
did
but
the 115 calendar spread.
down here, there's
but
no
I went
reason we
out
shouldn't
all
be
the way
closer to break even.
October 20th.
You didn't buy too
for
early.
The long side. So it's about a little over a month. But Tom, there's a currently 9
It's not like today went against you. I
Vega
think you bought them
on
like
this,
here even.
Right? You're spending about $2.80. It was $3.
Well, I say it's in
3.05
hindsight, I guess,
when we
but
looked at it.
still,
Now it's about
principle
2.80
applies.
because the stock has
You're
backed off a
basically
little bit.
forcing it to have the move in the
thing
first,
about this
or
is,
continue from
to heat
open
up,
in the right
implied
direction.
volatility starts to
Unless we're
pick
trying to
up
sell those
around,
in the morning,
the
which
industry
no,
and
sometimes you do,
around
but
in, AMD
they can just,
stock.
they're
You
all
can get a nice
lottos, so
bump from long implied volatility on this.
yeah, top first green candle. That's only if you're going to close it on a little pullback like right here.
It is
you know, on a break of VWAP when they're just a little bit profitable.
Yeah, let's break this.
You can't just hold that all day and expect
Kevin's
it to
got
work.
for us. Going out to the October
Unless
20th cycle.
it's just one green
42
candle
days
and it just dumps the
expiration.
rest of the day.
Buy the 115 strike call. Sell that same strike.
No, I think your strategy has to change.
Monthlies that expire in 7 days. You're paying roughly. We've got
I mean, when you
305
buy
up
it,
here. That's where it was
you're
trading
scalping
earlier.
and you're trying to do it
Trading
quick,
closer to 280.
or you're
So the debit
playing a
you
bigger
pay
move
is
throughout the
your
day.
risk on this one. So on the
And
risk
with
profile,
those, you don't
we've
need to
got
buy it in the
there
morning.
$305 per spread. On that one. But I think the key here, Kev, when you look at this type of strategy, you want to buy it during a low implied volatility environment.
Right.
You pick that strike where you assume it's going to go over the duration of the trade, and in this case, just about a month and a half, and it costs you less. So your risk is going to be less. Now, your break evens on this, about just under 124. Or just above 123 on the upside, just above 108 on the downside. So you've got a nice wide range. You don't have to be exactly right on a trade like this. And Kevin, one of the key things is when we look at calendars, this one's 1 month wide. So you've got some opportunities to roll or adjust this
How
trade.
did he wait till the last second to call?
You look at the at-the-money roll for the options that are expiring today. If you were to buy that back at like the 108 strike, sell next week's, that 1 week roll, nearly $1.90 credit. So there's where you can adjust or roll if the market's open, liquidity is provided to actually start
GNS
decreasing that initial risk that you have, and that increases potential profitability.
And you chip away at the net debit, which chips away at the break even on this trade. And this is one of those things where you can look at this and
Bubba strategically strategized. Nice.
If you look at the
no,
Vega,
like was it yesterday morning? You sold some.
Trade is about a 9.5, right? $9.5.
Bought them earlier than you sold.
would make
Maybe all of them. I'm not sure. He's 35% or whatever.
If you go out to January, if you move this using the risk profile, remember you can play with the dates.
I guess if it goes against you, just
it goes
just
from
hold
a
it.
9 to a 21.
Buy early if it comes
and
up.
There's the utility of a
Sell
calendar
it.
spread. You can move
Doesn't.
that date further out.
It's
Now,
just
the
turned into a
trade-off is
lotto.
it'll cost you more money to do that, right? But you
Scratch
get a
lotto
bump
every
in
day.
the Vega level, because if you want to trade implied volatility here, that's the way to do it. Move the date further out. If you want to play less, move the date closer up.
Right. Yeah, I think that's a good lesson for our viewers, is the fact that the further you go out in duration, the higher the volatility or Vega is going to be. And it's kind of the opposite of time decay or theta, where near-term options have they decay at a faster pace than
all the Greeks get more sensitive as you get closer to expiration, except Vega. Vega gets more sensitive as you get further away.
As you get further away. Good look at that. You do have some assignment risk on that short 115 call that expires in 7 days. Also, and as I mentioned, the adjustments or the potential rolls you have in there, you can roll it 4 times before closing it. And if those roll values are where they are currently, now if volatility rises at all, as Kevin mentioned, this will expand the price of this calendar also. So good look at directional play here as an example, picking a strike where you think this thing is going to go over a specific duration. All right, let's take a quick break. When we come back, we're going to take a look at another chip maker, and that's Qualcomm. Underperformed the tech sector this year and has taken a hit this week on the back of that Apple news. They're a big supplier to Apple. Fast Market's coming right back.
Call it, but don't have an ace. Heck. Alright, SPY getting back to those lows again. I got 9s. Give me 3s. Wait, how did I win that? What? I don't understand how I won that. Okay. Name. Nice, I was a 750 too.
All right, great stuff. As always, Ben, appreciate it. Go get some rest, Ben. You need to get some of that energy back here, buddy, for the future show that kicks off next Monday at 8 a.m. Eastern time.
Not one yet. Still kind of early for too much Flusherinos.
Now let's bring in George Tillis, Senior Markets Correspondent. George, we're talking semiconductors this week. And I looked at, we talked about the big names, Intel, AMD earlier.
Always 500.
I kind of wanted to hit on Qualcomm because it's really underperforming this week and this year. It's down 3% on the year. And now this story comes out about Apple potentially losing some market share in China due to the
How did I win that one hand?
Okay. What's the take here on Qualcomm?
You had a higher second pair.
It's not only that story, it's been underperforming all year before this.
It has. Look, if you look at it, at least in the last year, it's down about 17%. It's not performing well at all. I mean, it's trading around 2-year lows. About 2 years ago, it was trading around $180. And the funny thing is this is actually an essential company when it comes down to smartphone devices. Everyone's talking about Apple as of recent. When it comes to the semiconductors, everyone was talking about NVIDIA. But Qualcomm's CDMA technologies are really the backbone for smartphones. When it comes down to the market share, they have about 30% of global smartphones use their technologies. And one of the compelling technologies associated with Qualcomm is that they actually have what are called system-on-a-chip technologies, which combine both communications semiconductors alongside computing. And that's very unique to Qualcomm. Now, a couple of challenges you got to keep in mind with Qualcomm is they were growing their expansion base in the mobile sector, including things like tablets and smartphones. But at the same time, they've got exposure to Apple, about 20% of their revenues, based on their broadband modems, which Apple uses. The other thing is you've got to think about Huawei and some of the other competitive challenges. Now, there may be some export restraints on Qualcomm's 4 and 5G chipsets to Huawei based upon some of the geopolitical risks we're facing. We know Apple's facing some challenges. While at the same time, the CPU markets have been challenged in the last year. So you got a lot of things going against Qualcomm from an earnings and revenue standpoint. And if you actually look at the quarterly report that they published back on
breaking the low here, maybe
early August, I mean, sales were down about 30% year over year. I'm sorry, earnings were down 30%, where sales were down 23%. They actually missed on the estimates. So this is really an interesting situation where
it did break that level.
Would say, it looks very compelling now, considering Qualcomm's drought in price. The earnings estimates have actually declined significantly for both earnings and sales. But at the same time, there are some exogenous challenges that Qualcomm is facing. Again, concentration risk with Apple, geopolitical risk, and competition, because it's not just Huawei. ARM Holdings is another competitor now in the system-on-a-chip technologies, primarily for handset, mobile devices, and of course, tablets and so forth.
How did he win that? Oh, 5.
George, this whole sector, Qualcomm, ASML, Taiwan Semi, Broadcom, they all sold off on this news that you just mentioned about the Huawei phone and the fact that some of those chips, they think are skirting U.S. sanctions.
It's still kind of rejecting this resistance.
Be done? Is there any remedy to this, or is this just hey, you got us on this one, we'll get you on the next one?
Well, it's a good question. I can't say from an international trade standpoint
on this lower level now.
Standpoint what's going on with Qualcomm, but I will say this. I think if you look at the price action in the chart, it looks rather compelling, coming to some 3-year levels on the chart. The other thing is you've got. I
don't know if end of day we're going to get that inverse cup completed or not.
Holdings, concentration in Apple, but you also have to deal with
GNS,
the U.S. government export restraints on selling their technologies to Huawei and other Chinese manufacturers. So there's a lot of things going against Qualcomm, I will say. Yeah. But so is the chart. The chart's actually demonstrated quite a bit of weakness. And from a valuation standpoint, it's trading around 13 times earnings, or historically it's around 17 times. So this is an interesting situation for Qualcomm, which in the backdrop is actually a very important company, but it does get overshadowed for some of the majors like Apple and NVIDIA.
Yeah, what I read, China, including Hong Kong, 2/3 of Qualcomm's revenue at this point. So geopolitical tensions definitely going to hurt this one. And then the licensing side of their business also, if there's a slowdown in smartphone sales.
That said, what George said, it's getting to a pretty interesting point from a technical level here.
Right, yeah, for sure.
I'm honored.
All right, thanks to George Tillis for joining us, breaking down.
All right, guys.
Yep, thanks, George. Have a great weekend. Okay, Kevin, you know, you look at this, I mentioned it's down 3%. It's been a choppy trade. It seems like Qualcomm had everything a couple years ago where they're in automotive, they're in smartphones that were just blowing up. They're in every segment of the industry as far as semis go, but then also they've got their licensing business, which was adding to revenue, that they would lease out some of their patents and licenses, but it's been struggling.
They traded a very low PE for the business that they're in.
Yeah.
Their PE below 14, yow.
Yeah.
Think about where the other chip makers' PEs are. Just go through the list.
Now you want me to slow play, huh, Jay?
Than Qualcomm.
Yeah.
Qualcomm not getting a lot of love.
Not at all. And now you're throwing in the geopolitical tensions and the Apple news. So I looked at a strategy here, Kevin, with it kind of gyrating down at these levels of, basically near 52-week lows. 52-week low was about 101.5 about 3 months ago. So I looked at a strategy that takes advantage of a move in the shares. But they've got a Snapdragon event in October, so I wanted to avoid that. So we're going to avoid it. I went out to the September 29th weekly series. It expires at the end of this month. And I looked at buying an Iron Condor as opposed to selling an Iron Condor. And this type of strategy takes advantage of no movement or consolidation in the stock. You want the stock to move over the next few weeks here. So I looked at buying the 109 call, selling the 113
only slow
call,
play
so
if you
you're
have
buying a
good hands.
$4 wide call vertical, and then buying the 104 put, selling the 100 put. So you're buying a $4 wide put vertical. This makes up or comprises this four-legged long Iron Condor.
Can't afford to raise
roughly
pretty
about a
flat.
$2 debit for it. There's your risk.
Go all in.
$200 per spread. So Kevin, on this one, between about 102 on the downside and 111 on the upside, you don't want it to be there over the next 3 weeks.
Yeah, Tom, think about this. Why has the long Iron Condor drifted so much into our discussions lately, right? Because stocks are ripping. When they move, when something like that happens, they rip. So this is the opposite of the range-bound strategy. You're paying around $2.
You had a freaking straight on the river?
In either direction.
Right. And
gosh.
implied volatility at 52 lows in this name, even though it's
I didn't even see the straight out there.
Long Iron Condor's long Vega.
Not a good time to bluff.
It's
so fast,
buying
man.
a vertical on the call and put side, so it's costing you less when implied volatility and option premium is lower. But what you need is a move over the next 3 weeks on this type of strategy.
Dennis, I would not have bluffed there if I saw it straight just came
Kevin's
out.
calendar that we talked about earlier. Kevin, real quick, we got about 30 seconds here.
Here's
Your
some
outlook
call.
for next week, what should traders be looking at?
It's all about
just go all in on these
inflation
500K
data
ones.
Coming out next week. We're at the end of earnings season. Not a lot big there. A couple good names, though, but it's inflation. Next week's an inflation and the setup.
Queen's got it.
And don't forget that G20 going on this weekend also. See if there's anything coming out of that. All right,
No, I'm
that's
just gonna
going to do it for
muscle
Kevin
this
and I
guy.
today here on Fast Market. Stick around right here on the Schwab Network as Next Gen Investing is coming up.
Do it. Fold small blinds. Put them half in. Big blinds. 720. Like 360. Got it with the high card. Nice. Well done. Yes, you did get lucky. Go down now. You cheap DJ. And I can do the same thing to me. I've seen someone do this before. I think it was on purpose. They acted like they were gone. And then they... Please think I have a 7. Or a jack. I think I have a jack. Do it. You don't have 7s. Yes, sir. Raise. We'll play. And raise. All in. Oh, it automatically does it. I thought I was just gonna check. Dude. I got the flush. He had nothing. He had a 9-7. What was he doing? I thought it automatically goes to a check. I guess I would have won that anyways. You just had a 9. It's fine. Trying to back up. Bye. 1 o'clock. Nice. Too bad. The better card.
Side Alex Coffee, happy Friday. I cannot exactly say it's been a long week, but I know that is the overall sentiment here because I had a very much shortened week. But we are seeing some green today, not a ton of it. Russell now lower slightly, but all things considered, all of the tech wreckage we've discussed this week, we'll be looking at some of those names further, but doesn't necessarily seem like, again, like it was as doom and gloom as perhaps the headlines would have made you think.
For some reason, if you make a holiday shortened week, it has to feel like you got 5 days into 4. Every single time I'm exhausted, even though it's only 4 days watching the markets here in the office. So it's like an unwritten rule that it has to be just exhausting if it's a holiday shortened week. But with what you said in mind, today is just an odd kind of quiet day. It's almost as if, you know, Oliver picked a good day to take a day off because I don't know what you're missing. Like, you know, you wake up, you check the futures, you wake up 4 hours later. If you took a little nap, it would look the same. It's just been that boring.
Yeah, Apple hire is pretty much, I would say, one of the most exciting movers of the session, but we do have some earnings reactions to break down today, and actually we're looking at a lot of green names today, so hopefully ending this Friday on an optimistic note. As always on the show, though, we'll kick things off with our upvote and downvote segment. Following that, we'll chart and trade those upvotes. Our FOMO discussion is a name that is modestly lower on the session, but expected to close out this week up 2%. That is all things Tesla. We'll dive into all of the headlines that circulate that EV maker later on in the show, and then we'll be looking at Kroger, which has had quite a day. Initially lower, now rebounding those losses after some mixed second quarter results.
Come on down.
And last but not least, we will look at Marathon Digital, which is seeing some pretty steep selling today, following some security offerings. We'll discuss that with George Tillis later on.
Yeah, Kroger, like quietly, even though it's not as interesting as some of the names we'll talk about, just has stuff going on right now with the Albertsons issues, getting that through, earnings and movement. It's been kind of down in the last, 52 weeks, not including today's action, but it's been up year to date. It's just sort of been a quietly kind of intriguing story, although it's not a next generation type of recurring stocks. Looking forward to that conversation, no doubt. Looking forward to the very cloud and software heavy upvote downvote segment we'll get to in just a moment. And any chance we can talk, one of the three names that really seemingly move markets from Apple to Tesla to NVIDIA is great. And so today, FOMO highlighting Tesla after we did Apple yesterday, I'm excited for. So looking forward to that. And then getting the update from George, though, is good, especially when we get to talk a name like Marathon Digital that has so much going on kind of behind the scenes. But as promised, let's do upvote, downvote, not endorsements, not recommendations. And I got to be honest, this first one here, application software company, doing kind of a lot in terms of kind of management of stuff within an organization. I don't look at this one that often. So this is a name that it caught my attention, no doubt, today because it's up almost 10%. But that's really the reason why.
I completely agree. And I was going for like a green theme to kick off this show, which it definitely is. I mean, Smartsheet is the leader of the group, like you said, up over 9.5% here on the back of some second quarter earnings. They reported their second quarter revenue growth of around 26% year over year. This figure did beat forecasts. Adjusted earnings also beat expectations by more than double. Subscription revenue rose 28% year over year. Professional services revenue increased 7%. Billings was also up 18%, and their average annualized contract values per domain-based customer was also up 17%. Now, why I think we're seeing such a strong reaction is regards to the CEO's comments on the earnings call, saying they remain focused on delivering innovation around generative AI and other areas to help their customers achieve more. I think anytime you can throw in AI in a company like Smartsheet that is sort of underreported tends to give you a boost here. They also do expect their third quarter revenue to fall in line, but slightly raise their earnings expectations higher than what the street had been forecasting. Citigroup, Canaccord, BMO, Morgan Stanley, Needham, and Berenberg all raised their price targets, and the average price target of around $50 does imply some upside from here. This name is now up 12% year to date. It is still down about 16.5% from its high, but I just think anytime you can throw in AI when you're a name like Smartsheet seems to be a benefit.
Is that a good thing? If you just say AI and you're being a benefit, because I'll give you the argument as to why that's not. At some point, you got to back this up. If you tell us that you're working on generative AI things within your software, and you say that it's going to be incrementally positive for your business, well, at some point that has to show up in the numbers. So in a way, this is equivalent to the same situations that happened during the pandemic, where companies like Zoom Video and companies like, I don't know, Wayfair in a different industry borrowed all this growth from the future. The market gets excited about it and fails to realize that, wait, that can't happen every quarter. You can only get sent home to your house once, and you only really redo your office one time. So in the same way, you can only say generative AI so much before the market kind of gets sick of hearing about it and wants to actually see it. So, Smartsheet, maybe there's going to be one of these companies that actually capitalizes on it and does something good with generative AI in the near term. But at this point, it's become almost a novelty.
I completely agree. It's sort of like back in the day when everyone would throw blockchain onto everything on their earnings call, and that would get a lift. And now we don't discuss blockchain hardly at all anymore. So that's a really good point. But we're not done talking all things AI, because our next name today here is Snowflake. And according to D.A. Davidson, they see Snowflake as an up-and-coming player in the AI intelligence world.
I don't like that straight. Isn't that straight? I always get confused between straights and flushes.
Initiate the stock
I don't like that straight out there.
And their $200 price target does suggest around 25% upside from where shares closed on Thursday. They went on to say that even after cloud optimization efforts that plagued software companies this year, they still view Snowflake in an advantageous position, maintaining a best-in-class growth rate and well-positioned as a cloud data company to benefit from increased AI demand. D.A. Davidson did say their proprietary developer data does indicate activity surrounding some of this machine learning workloads is on pace to grow 31% in the third quarter of 2024, which they also believe is contributing to Snowflake's growth here. Snowflake did announce, though, in late June, so at least we have some news to back this up. They did announce in June they're partnering with NVIDIA to provide various businesses some AI applications using their various technologies. So that is at least something I think that you could support some of the strength we've seen in Snowflake this year. It is up 15.5%.
Oh, there's two diamonds out there,
it's
though.
not at all anywhere in the playing field of NVIDIA, but it's up 5.5% this week, and obviously seeing some nice strength today.
Yeah, there's a couple words in this analyst's language I think are critical, and those are best-in-class growth rates. You hold that going forward for into perpetuity, probably going to be doing okay as a company. Granted that you're not, spending way too much money for that growth. At some point, it's got to be profitable at the same time. But when it comes to some of these cloud names, seeing growth is important. If you can ever say best in class about anything, particularly growth in that space, it's going to be seen as good. Obviously, a stock that has struggled if you look back over the last 2 years, but it's doing its best to find its footing and work its way back to some of those little bit heftier valuations that it once carried. Next on the list is Adobe. This is a company that kind of set the world on fire when it comes
lucky for him to go all in on my Pocket Kings.
Software, becoming software as a service and dominating a space. This is the leader in design software.
It really is, and I've always said it's a difficult software to learn, but once you learn it, it's truly best in class. And this is the best performer on this year of this group here, up 66, almost 67% now year to date, touching new 52-week highs earlier in today's session. They've since given back some of that strength, but still clinging on to a slight gain here. Mizuho did upgrade shares, though, to buy from neutral with a price target of $630 a share. That's up from $520, so that's pretty substantial and implies about 12% upside from where we closed on Thursday. They said their enterprise checks were generally healthy and indicative of a much better fiscal fourth quarter for Adobe, also highlighting their web traffic that has continually meaningfully accelerated, and they do expect some good upside to their net new digital media annual recurring revenue in third quarter. However, they specifically did note this is not a call on their quarter, as Adobe, they think, does remain very well positioned to benefit from this digital transformation. And of course, they did mention they have rising confidence in all things generative.
That's the best way for my options to work.
Significant growth driver.
Just distract myself with
now, Adobe is very interesting because they have earnings next Thursday. So we have a busy week next week. There's a ton of events on the calendar, but Adobe earnings
GNS holding
one
16%.
I think that will be important to keep on your radar, just given
GME down almost in that same range, chopping around with SPY.
Really for quite some time here, and not seeing any sort of faltering this
BBBYQ
week. It's
below.
About 0.5%. So all things in the
Resistance
tech world considered, that's pretty, I'd say, pretty much an outperformer here, Alex.
This is one of the most interesting 5-year charts that you can
AMC
find.
now down 10%.
And the reason being is it really could do no wrong. I mean, it was a pioneer, again, it's kind of transforming the way that you actually interact with its services that it provides or its platforms that it provides. You used to have to pay like $300, $400, $500 for the newest edition if you were lucky enough to be a student at the time, and that might be unlucky in its own way, but at least got a discount in some extent while you were
Blinds are that big.
But
Heads
once
up.
they allowed for these subscription-based models that allow shareholders and stakeholders in the company to have a more consistent idea of how much money was coming in, but it also allowed you to get access to the newest versions of the software in a much more efficient way. It expanded their target market tremendously, and it led to a lot of upside. I can't even believe, looking at this, how badly this thing got beaten down last year.
Upstart looks pretty good.
50% of its value off those highs. But it has began that long journey towards recovery. I'm looking forward to this earnings announcement next week.
Yeah, and I think obviously considering we're pretty earnings light,
like
that will be
reverse
extra
split.
Focus next week. But our last name today is First Solar, and I have to say I did way too much digging on the alternative energy space because we've seen such a divergence in performance in 2023. You have companies that are
fingers up
utility
6.5.
markets like First Solar and Array Technologies that are soaring, but then some of those stocks that service, say, like residential rooftop customers like Sunrun has struggled. So simply put, we know now that not all segments of solar are growing at the same rate. Utility solar, which is the arrays of panels that are installed on farmlands or other various spaces, are on track to basically double their growth rate as they did compared to 2022. The biggest segment of that market, utility solar, is dominated by a company like First Solar, which does make these thin film solar modules in the U.S. And so for that reason, we've seen this name really take off this year. It's fallen off of its highs pretty substantially, I will say, but just when you look at it compared to some of the other alternative energy names, it's been a clear outperformer. They've also been a huge beneficiary of the Inflation Reduction Act. So, I mean, this name is sort of in a league of its own at this point. Today, seeing shares upgraded by Deutsche Bank, the firm did cite First Solar's strong growth message during its own Investor Day, raising its price target to $235 a share, which implies about 30% upside. And there were a ton of other optimistic analysts today. I mean, Baird, JP Morgan, Wells Fargo, UBS, Guggenheim, also upping their price targets on First Solar.
You know, this has been a pretty big pullback, about 25% or so off of its highs. But when you really go to consider the impressive run that this name has had,
there's ever been kind of like an 25%, yeah, it's a big pullback, but it's maybe okay, this might be that, because this is a stock that really hadn't had any adversity except for the end of 2021 where the market peaked out into 22, but really ever since that Inflation Reduction Act or that spending bill towards alternative energy has come out, this stock has largely moved one way, and that's to the upside. It's been really, really impressive, and we'll see if it can find another base again and work its way back towards those 230s that it saw just a couple months ago.
Right. I mean,
Closing another 25% of those
why
puts.
we're seeing such a variance in performance in some of these alternative energy
Maybe
names.
the last
but
50%.
It's clear, like you said, this name has been a consistent winner for the year. But we'll be diving more into our upvotes today, those being the names I think pair the best together, Snowflake as well as Adobe. We'll be looking at some example trades of both those names as well as some key technical levels. Stick around. Next Gen Investing will be right back.
Stick around, sucker. Yes, nice consolidation up there. What we got going on here? Really just trading this range, trading back here, so that 131 level, it continues to be resistance. That's a nice little profit zone though. 25% range. That ain't bad. Barbecue's really flirting with this line. Big tease that barbecue. CDB! Anything about the sup plan released? Yeah, I don't know if that'll be the catalyst for Zero here or not. I think according to Lords, it's going to be that's also the day it's going to get moved to the next market down, the expert market, meaning you won't be able to buy it. So we've been a more restrictive marketplace, more restrictive than OTC. All right, I closed out the last of my puts. Went from a small gain to a very tiny loss. Okay, I had exposure all day.
Term moving average. However, we hit a roadblock here. Our purple 252-day exponential moving average, the longest term one that we typically follow on our charts here, not able to clear this hurdle today. That's the obvious kind of battleground point here heading into the close for this name. So we can see that in terms of the overall trend, things have been improving here as we've had this rally up off the lows. You can see that our short-term 21-day EMA and our medium-term 63-day EMA both starting to slope upward, changing from a downward slope to an upward slope, and that suggests the overall trend is on the move upward here. That's what we try to look for as technicians, early signs of trend change. So Certainly not a guarantee, but this is the type of thing that you want to look for. Another source of bullish evidence here is that the RSI has crossed above the 50 midline here. That's the line that separates bearish momentum from bullish momentum. So that's another sign that perhaps the trend is improving, but we'd really want to see price break above that purple 252-day EMA. In terms of further resistance, the 173 level. That stood out to me to the upside because that's about where we had this gap open up. That's also roughly the site of a big volume node and of our value area in our volume profile study. You can see that there's these two thick yellow lines. Between those lines, that's where 70% of the trading has taken place during the past year. So that edge can be a source of support or resistance. In this case, we'd be looking for it to be resistance. Beyond that, the 180 level is about some highs that we saw beyond that point. To the downside, our moving averages and our 160 level that was previous resistance would now be support.
So like you mentioned, the 173 level to watch, slightly to the upside, also now 180 beyond that, which would be pretty optimistic here for a name that is relatively outperformed, I mean, pretty much in line with the overall market this year. But given these technical levels that we're seeing the RSI line up with really the overall price direction here, which is always encouraging for the bulls. Alex, walk us through what you're thinking as far as an example trade here, leaning into some of its more recent bullish activity.
D.A. Davidson said to buy. That got my attention there with a $200 price target, way above the resistance levels that Rick talked about. But I did want to focus in on that second layer of resistance that Rick had mentioned around 180. We're looking at buying a call calendar spread, but we're going all the way out to November. That's going to give this plenty of time for a potential test of that level should this recent bullish momentum continue. What we're looking at in particular is selling October, buying November, 180 calls in order to create a calendar spread here in which the best case scenario, as we can see on the risk profile, is at 180. Mountain-like top peak here right at the strike, it's 180. Break-evens are estimations of sort of how this would perform around that October expiration. Most importantly with this particular trade, it has risk definition. You can see in the upper corner here, $300 is the max loss on this trade. That is coinciding and corresponding to the debit spent on this particular trade. In this case, that's $3 for a debit. So we know options are priced per share, and the deliverable 100 shares, that equals $300. So we're looking at a strategy that has the best case scenario of a move to the strike. So what does that really mean? It means this can be customized. Jenny, we've talked about this countless times with this strategy. This is one that if you have an opinion that differs from this particular illustration, well, if the strikes are available, the expirations line up, you could do something that's maybe more bearish, even more bullish, potentially neutral as well, and that might just change the price, but it'll certainly change this risk profile to better reflect whatever that outlook is. Aim small, miss small, precision over necessarily directional accuracy.
We're really, like you said, I mean, strike selection is very important for this example trade here. But now to shift gears, but not too far away from the overall AI cloud space, we're looking at Adobe, which has been clearly a winner on the year. It's up over 66%. Rick, it touched new 52-week highs earlier in today's session. It's now fallen a little bit out of favor on the session. It's still up ever so slightly, but sort of falling off its peak here. So walk us through what you're seeing in Adobe.
Yeah, very strong mover, more than doubled off those 52-week lows here. And what strikes me immediately about the price action is we had a break upwards, a little bit of sideways consolidation, another big break upward, sideways consolidation, a further break upward, but was a little smaller this time, and then a longer period of sideways consolidation, now another break to the upside here. Kind of this stair-step type price action. And you can see it's reflected quite clearly in the volume nodes here in our volume profile study, this blue bar graph on the right side of the screen. This shows the price levels at which the heaviest trading took place during the given year. You can see that there's been a series of acceptance at these prices, then the breakout where we have these troughs in the volume profile here, and then you can see the obvious important price levels. And these line up with like 480, 520, and then another quite small one here near 560. That could be the start of another of these more horizontal price action phases here. Now, We don't know for sure that's going to happen. I'm just kind of calling attention to what we've been seeing so far during the past, 6 months or so. And it's been an interesting situation because we can see that our steep trend line has given way to a more shallow trend line, a more shallow channel type here. We did break above this 550 level represented by these old highs here, and we're pushing into these yearly highs today. So it's an interesting situation for this stock.
Okay, now to state the obvious here, we know this is RSI. When looking at Snowflake, I can just bet that that red line is not indicating necessarily positive RSI trends.
Well, it's kind of interesting because we have a situation where the momentum is slowing for sure. We can see it's trending downward. RSI can use trend lines similar to how price action does. Price is still trending upward, but the gains are slowing down. That doesn't necessarily mean we're in for some kind of crash or something. It just means that perhaps we're not moving with the same enthusiasm that we were previously here. I did think it was interesting, though, that we failed to break above that 70 threshold on the RSI. That's the overbought area. And entry into that area is usually regarded as more bullish. So what we'd want to see if we were bullish there would be a push above that trend line and above that 70 threshold, Jenny.
Yeah, now we're looking at certain price points to watch here because we have the earnings event coming up. We have Mizuho with a $630 price target, obviously, over the next 12 months. But what price levels are you watching into this earnings event next week?
Well, the obvious one first is that 550 level, like we said, our old highs here. It was also a point about where we hit lows there as well. Beyond that, the 21-day EMA comes in around 540. So 550, then 540 to the downside. The upside is a little trickier. When we're making these new highs, we don't really have any old price action to go off of here. So I did two things. First is I took our trend line that we took across the lows and I just duplicated it to form this channel. That could help us project where we might see some resistance. That comes in around 580. I've also got our standard deviation channel study. We take our line of best fit, our blue linear regression line, then we do one standard deviation to the upside. That comes in around 589. So some potential areas to watch here.
Yeah, right. I think that's really well put, and obviously a good look at Adobe ahead of their earnings next week. A clear outperformer on the year and still actually just slightly negative on the week. We'll leave it there. Our chart master, Rick Ducat, now trading this name, Alex. Given the fact that I do think there are some heightened expectations, trend is still pointing upward, but you made a really good point about that 5-year chart. We're still well off highs. So
yeah, I'm sure there's ways I can avoid going to the expert market.
Yeah, looking at this one with
at this point, I don't think there is
a lot of optimism right now. You got Barclays, you got TD Cowen, of course, Mizuho, as you mentioned, all hiking.
That's what's going to happen. There's not something that changes.
Earnings next week, so certainly a ton of optimism. Rick and I were focused on the same level, though, to the downside at 550, potentially being an important level to watch. We looked at a neutral bullish strategy for this illustration centered around that mark. And so I'm going to preface this.
Today feels so much later already because it's like it's been raining here, so it's just dark.
Wide, the 550, 545.
Only 130.
The market maker move in this stock next week, Jenny, is probably going to be somewhere between $25 and $30. Well, we only got $11 in cushion right now in this particular stock to that 550
GNS popping
strike.
back up 20%.
While this is neutral to bullish in its construction, this is really bullish given in mind that we're having a big potential market moving event on the calendar before this thing expires. But we're looking at a $1.75 credit. That'll bring our break even down to $3.48 and a quarter. So give us about a $13 or so of cushion into next week with that earnings event on the horizon. It's risk defined. 325 is the max loss, 175 being the max profit. So this is a little bit over 1/3 the width of the strike, so a little bit better than a 2-to-1 risk to reward ratio for an investor or trader looking at this type of a trade. What I will say, though, Jenny, as we go into this, combining this with what Rick had said on the chart, if you're looking at a momentum that is starting to stall, moves that are becoming a little bit less robust, maybe this is the way to actually be bullish in a stock because maybe upside is just maintaining the values that they've gained so far this year.
And that's a really good point because we look at some of these names in the tech space that have fallen like 5% this week. I think overall momentum has stalled a little bit in these tech names, but Adobe has fared a little bit better, so perhaps that is your upside just when looking at this name into the earnings event next week. But we will leave it there for this segment. Now coming up next, it's time for FOMO. So we are talking all things Tesla to close out the week, which is down about 1.5% right now. Various headlines weighing on the stock. We'll discuss those more coming up next.
You could think.
Okay. Got back into some puts there. Draw projection, it looks like, yeah. Bubba might be saved after all. Art style. GME to 16. Maybe next week. Today's down move is pretty large and kind of interesting. But what they'll try and do is bring it down nice and slow, nice and boring like this has been for months. And not this exciting volatility we've had off this bounce of 16.
Rest of the company's EVs a volume boost through this halo effect. So that's the positive analyst noise I saw today. Now we'll move to the negative, which is from Gordon Johnson. He's the analyst that has that famous $24.33 price target on Tesla, saying that right now it's time to short Tesla stock again, barring banking crisis and the Federal Reserve rolling out more emergency loan facilities. He did say Tesla stock appears to have hit the skids imminently, and noted that there's been a slew of negative headwinds that have weighed on the shares, including the potential delay in their Giga Mexico until at least 2026, the production slowdown in Giga Texas, and Fremont production plants, saying the demand side of the equation also doesn't paint a positive picture, given that Model Y inventories were at a record high despite their 10% discount. He pointed out weakness in weekly China insurance data for Tesla vehicles, saying that in Europe specifically that the sales were flat quarter over quarter. And he highlighted, I thought this was so interesting, some of these sell-side comments that have been so negative around Tesla. Bernstein was one that suggests we could see some pressure in terms of EV prices even further than we've already seen this year. Also mentioned Deutsche Bank, which has flagged risks to Tesla's third quarter. But for every bear in this name, there's like 3 times as many bulls. I mean, that's just a fact. At this point, there's 46 analysts. There are 21 holds, so there is a more neutral stance, but there's 18 buys and then there's 4 sells. So you could argue that while there are those that are bears in this name, of course, naturally in balance, but there are so many more that are enthusiastic, like Dan Ives. And I will say, all things considered, this name has seen a significant pullback. It's down about 20% off its highs. It's still up 103% this year. There is no auto player even close. I believe the closest one is Li Auto, which is up 89% this year. Totally different company at this point. NIO's up 2.5%. And then you look at some of the U.S. players in the auto space. Rivian, 24%. Lucid's down 15% this year. GM and Ford aren't even on the map. So that's always my argument, is like, well, you could be pessimistic on Tesla shares, but they speak for themselves in terms of their year-to-date performance.
Yeah, there's a lot to explore here. I think that's the first thing that I would say, and this applies to beyond Tesla. You should really never take one person or one firm's opinion and use that as the basis for a decision. It's one piece of the puzzle. And no analyst is 100% right. None of them are really 100% wrong. They all have kind of different thoughts and methodologies to go about this, and maybe even different kind of end goals as to what they're trying to accomplish. What it sounds like in the case of I believe you said Gordon Johnson, the kind of notorious bear, doesn't sound like an overly optimistic economic reading. And so, to me, that gentleman's using Tesla as a method to bet against kind of the trajectory of where they see the overall market going. And from that logic standpoint, it kind of makes sense. It's a higher beta name. It's one that's certainly gained a lot of market cap over the years. It's shown a propensity to move pretty viciously when it does move lower. And so you can understand the logic. You don't have to agree with it. You don't necessarily have to think that Tesla's worth $24 to understand the message that's being sent. And the same way, Dan Ives has a way of kind of looking at all the positives and giving it a really optimistic viewpoint, and that's fine as well. Doesn't necessarily mean that either of their price targets is ultimately where Tesla's going to go. What really sticks out to me on Tesla's analyst kind of coverage is that it's become less binary as time's gone on, as it become a more mature company, one that regularly shows profitability and more sustainable growth and has expanded its factories and product offerings. There's actually a reasonable amount of them that have sort of neutral ratings and price targets that are sort of within the realm of where Tesla actually trades today, where before it was like Tesla's going to 1,000 or Tesla's going out of business. Those are your two choices, pick one. Now there's a lot more, Tesla's going to be like all these other stocks that become more entrenched in the market. They kind of ebb and flow with the overall market, and I think that's what we've seen.
I completely agree. We always said this was one of the
little head and shoulders on there below VWAP.
And it still is. It still is, but
It wants one more little test on VWAP.
Things start to stabilize. I think that's encouraging.
Kind of loaded up on puts, actually.
A sign of a company that's been in the EV space much longer than so many of its peers. And I know that BYD gets a lot of love out of China.
The low day.
I've seen analysts highlight that, but Tesla has right now staying power because they've been in this market longer. They've been profitable for quite some time. And you make a good point, Alex. I think like anything, form your own
Seeing how early it was made me think this move could still happen.
And
still have time for everything, balance and everything.
When trading this name
when I closed out them earlier, it just
for
felt later.
Straight winning week, so all of
But we're getting
the
that
negative headlines
closer to
that
power hour
Tesla's
push.
down over 20%. It's like it is up 2% this week on what is a losing week for the overall market. So with that in mind, we're also taking on the stance there are macro pressures weighing on the stock. Walk us through then a more neutral strategy here.
Yeah, I looked at a strategy that is neutral, but it sort of encapsulates how Tesla has traded and seeks to kind of surround the recent price action as best that it can. What I looked at is neutral because we're selling an iron condor, but it has a bullish cadence to it as well, given the fact that we're a little bit closer on the put side than we are on the call side in this case. So as Kevin Hinks would say, we've given it a little bit of attitude here. So I would call it a neutral strategy, but maybe bullish in its construction. And so what we're looking at in particular is going out to the October expiration, and we're selling the 225-220 put vertical alongside the 300-305 call vertical to create an iron condor for $1.75 credit. So similar risk to reward, exactly the same risk to reward as we had in Adobe, in which we're risking $325 to make $175, so a little bit better than 2-to-1 risk reward for a trader or investor looking at this. But you'll see the midpoint is only about $25 or $20 away from the put side, upwards of $50, $55 away from the call side. You'll also notice if you took a look at a chart on Tesla, it really hasn't spent any meaningful time this year above 300. In fact, the high of the year is right below that at 299.29. However, it did breach below 225 briefly for a handful of days back in the middle of August. So looking for some of those levels that had held to the downside to continue to hold. You see that risk profile really illustrating how this one performs. You can kind of see now with that illustration of the year to date or the last 1 year of trading, that last maybe quarter to a third of that chart is really the area that we have circled, and we're looking for it to kind of stay in this recent range of this. This one does best, Jenny, if it just stays between our short strikes. So if we go and fast forward to
Jenny
October
says it, I believe
and Tesla
it.
was still trading at 247, that would be a winner for this trade.
And we have what's somewhat been stuck a little bit range bound. I know we're expecting
What
to
do you
gain
got?
on the week here, but now we're losing today. It feels like we've teetered back and forth, unable to sort of break out above and see a consistent uptrend in this name. But always a good one to watch. This name is so heavily traded. And
Want a VWAP
it
test?
is definitely a news light day in Tesla shares, but there's always something to talk about regarding Teslas and the overall EV space. But coming up next now, we'll shift our gears here and focus on Kroger post-earnings as they are developing some of their merger with Albertsons. Both shares are getting a nice lift today, up over 3.5%. We'll discuss that more with
$4 now off those lows.
Yeah, so this was a completely different story. I looked at this name on the Future Show earlier, and it was down. So then it was like, okay, it spoke to some of the mixed second quarter results. Now it's higher. So clearly the street changed its mind here and in a pretty vast way, like Alex just pointed out. But here to tell us more on what's driving shares higher now, I'd like to welcome in Renita Young, Senior Markets Correspondent here for the network. So Renita, seems like the market likes the partnership with Albertsons. It's going to be this grocery behemoth, which definitely always excites me, I think.
Yeah, that is an exciting thing for markets, but not to be excited about without antitrust concerns, which has a little bit to do with what I'll let you guys know today. But first,
These pop-ups, you
shares
can see
are
what people's
higher for
cards
Kroger,
are.
Of course, Albertsons shares are higher as well. Kroger did have earnings today, and earnings came in better than expected. We saw that the company agreed to an opioid settlement, and then it's actually selling 400 stores to be able to acquire Albertsons.
Kroger had an
Now, when we
opioid
look
settlement
at
too?
The earnings report, the company actually
What?
swung to a net loss of $180
They have a pharmacy?
million or 25 cents a share. But when we look at it on an adjusted basis, adjusted earnings came in at 96 cents a share. That was above expectations. However, revenue came in below expectations. It was at
Rite Aid's like,
$32.85
we'll
billion,
just go bankrupt first.
and that was missing the expectation. It was a 2.3% contraction from last year. Same-store sales minus fuel grew 1%, and that missed the expectation of a 1.3% rise year over year. Now, the company says sales are under pressure as shoppers pull back on spending. They're trying to find
still
cheaper
chopping around here
options. And as we've seen, a
lower
lot of
level.
them might be going straight to Walmart. You know, and the company did affirm its fiscal 2023 outlook for adjusted earnings of $4.60 at the high end, and same-store sales, they're expecting them to grow at about 2% at the high end, but they noted that customers are going to remain challenged as macro conditions continue to tighten. But let's talk briefly about this opioid settlement. Kroger reached an agreement to pay $1.2 billion to states and subdivisions and $36 million to Native American tribes in installments over 11 years. That's settling what they call the majority of its opioid claims. Kroger says that settlement is not an admission of guilt or wrongdoing or liability, but as a result, Kroger did book a $1.4 billion charge, which also includes attorney fees as well. And then lastly, Kroger says that it will have to sell more than 400 stores to be able to merge with Albertsons, and that is a plan for the company to try not to be as antitrust as much of a warning for antitrust as well, because it includes an option to sell an additional 237 stores if it's necessary for antitrust clearance.
It looks like, Renita, too, alongside the stores, it appears they're selling the brand names QFC, Mariano's, and Cars, as well as 8 distribution centers to CNS wholesalers. This was a story that had leaked out from Reuters as well as Bloomberg throughout the week. So now we have those details officially from the 2 grocery store chains on what that deal looks like. But to me, this seems to be the optimism is one, that the settlement, of course, now the finalization or the idea of what this this kind of plan to get Albertsons the acquisition through. But also kind of lost within that is they're back in their full year guidance. One of the things Oliver and I had talked about yesterday was that this thing's been trading below its forward price to earnings ratio. So to me, that's saying the market wasn't that confident that it was going to be hitting its numbers. So maybe saying that they're going to be able to brought some of that optimism back as well. Any final thoughts, Renita, before we say goodbye?
I think also the fact that the company is willing to offload some of its stores in order of bringing in more cash on the balance sheet. That shows something too, Alex.
Right, because I feel like you're going to have this grocery store behemoth, which then, like you said, antitrust concerns. So perhaps then offloading then helps mitigate some of those risks to the antitrust regulators. But
I might start playing some real tournaments in the middle of the day.
Nice move higher today, so
or cash games.
That nice reversal on the session here. We'll leave it there. Renita Young, senior markets correspondent for the network. Now coming up next, for under 30, we are looking at
Kroger settled.
Digital,
oh my gosh.
15% now.
Kroger settled an opioid
senior note exchange
lawsuit.
We'll discuss that more with George Tillis coming up next.
Not sure if you heard it. I guess that's because they have a pharmacy in there. Why are they selling opioids in a grocery store? Gotta be a pharmacy. Been a long time since I've been in a Kroger. There's a straight there. Put them all in again. Or no, this guy didn't go on him before. Kings. Yeah, I've been getting good cards. Too bad the small stack at the table is the one that's calling me. Just slowly bleeding his chips. Oh my gosh. Alright, I need to stop slow playing when I start bluffing. Or playing more aggressive. Don't want spades, dang it. Spades got there. Re-raise, I'm gonna fold. Okay. They have a pharmacy. Must do a lot of business. That's a pretty big settlement. I think Rite Aid's actually been. I was trying to look it up. I think they've been. I think they've been bankrupt before, maybe. It's crazy how many companies will go through bankruptcy and come back, like multiple times. It's just like part of their standard operating procedure. Like every 5 years or so, just declare Chapter 11, get rid of all your crappy debt, come back. I don't know. I'm trying to remember what company specifically I was hearing about. They've gone BK like 3 times, 4 times. I maybe shouldn't have folded that actually. And just keep coming back. Still undecided. Coming up on 2 o'clock though, we'll see. Maybe the move starts at 2. GNS little pop up there. Like 8 ways to a flop. I can't even. Ways. One re-raised. I meant to do this on the flop, but whatever. Someone's got to have a better hand. Pair of 7s. Pair of 9s. Someone has pocket somethings. Suspicious. I think I've slowed them all down with all my crazy good hands. Pair gets it. Buy the low there. Puts her up a little bit. I want that low of day though. Is max pain 445? Well, we're there right now. So it can be anywhere from what, 444 to 446 the strikes for to be in that max pain. So it's already there. I'm cautiously optimistic. We'll see at least a low of the day test. But it's shown pretty good support. Or like this line right here. is tilting or something. Yeah, so that's a little sketchy. Just Friday chop. Ways. Ooh. Gotta put this guy all in. Isolate him. Be too crazy. Called that? Alright, now I gotta put them all in. Pocket aces. Didn't get there with the hearts either. Nice pocket aces. Nice call. 2 pair would have been really nice. Go crazy. Yeah, I mean, I isolated this guy. He sit on pocket aces and he didn't see. The hearts were there. I got unlucky, I guess. He didn't get lucky. I got unlucky. Very nice. Yeah. Daily recaps on GME probably not going to happen, given that GME doesn't do a whole lot. If you have any questions about GME, though, happy to discuss them. Ryan Cohen was, yeah, not new, like Dink said. That was months ago. I'm indifferent to it, I guess. I don't know. Is he guilty? I guess I don't know. I don't have any inside information that led them to want to investigate. We just have what the stock did, and where he, I think, sold and made money, and so yeah, I can't have much opinion since I don't know all that went on. That said, that news, there's no new news there. So Jimmy stuck down. Yeah, I can give you TA on it. It looks like it's gonna keep coming down. It looked like that before earnings, but of course I don't like to predict through earnings or look at TA because I can do whatever. November 25 calls? No. I don't think those will hit. Were you green on them before earnings? Yeah, they don't like his tweets. Spy. I'm pretty red on these puts. I lost a lot to that guy. That sucked. SPY back to VWAP. A few months ago, you're down on him. Yeah, I'm not optimistic on unless GME can break that resistance, but I think it's going to probably come down and retest the 16 level at the very least, or it makes any kind of move to the upside. I think it'll retest here, and potentially the 15s, and see if it even breaks below that. Alright, I've got to consider closing these puts. Didn't do what we wanted. MACD flip bullish. Oh, even having engulfed me on the 5-minute there. Look at that. Ah, we suck again. Dang, I went in heavy on those puts too. That was stupid. See if we reject around the 50 moving average here. Timing's got there, of course. Ooh. Just diamonds? Oh. Alright, Jay, thanks for creeping by, man. Good weekend to you, mate. GME above VWAP there, down 6%. Barbecue up 1.7. Fly is also above VWAP now. Oh, yeah. could have called that, I guess. Whatever. Just keep re-raising. That's why I thought about calling it. Yeah, Discord, Jay. Alright, thumbs up, more Jenny.
So we'll see. All right, Caroline Woods, thank you so much for those two important stories. Now let's take a look at the bigger picture. Ed Siddell's with us, CEO and Chief Investment Advisor at EGSI Financial. Ed, nice to see you. So how are you feeling about the market? You thinking about maybe a silent recession? What does that mean?
Yeah, well, different names for stuff.
You know, silent recession, I say it like that because it may not meet the definition of a recession, but everyday America, you know, they're feeling it in the household at the end of the month. The money just isn't going as far as it needs to. And so people are going into debt using their credit cards just to be able to meet their monthly expenses and bills. So I think that's going to create a
delay, and I did want to hear more about what you were saying about the consumer and that just their dollar doesn't go as far, and so you are concerned that with inflation that folks will behave differently, right? That could affect everything.
We're taking that pot.
Everything from CPI, maybe inflation will come down, but jobs and spending and all that, right? Savings are being depleted.
It's a recession nobody talks about. Oh,
you know, that $2+ trillion
it's like the opposite of that.
In savings, that surplus.
It's a recession everybody talked about.
Right,
that says we're not in it.
We've got, you know,
everybody talks about it and says we're not in
it. In credit card debt. You know, credit card rates are sky high.
Thanks for defining it, though, Kitty.
I just
You're
saw
so
Macy's
wise.
credit card is over 34%, and so that all adds up. And then compounding that whole thing is that student loans, you know, borrowers have to start repaying that back October 1st. So, you know, it's a cumulative effect that's going through. Right now, a lot of the jobs, people are looking at it saying, well, you know what, we're adding a lot of jobs to the economy, but the jobs that have been lost are higher paying, typically with benefits, and they're being replaced by, you know, lower paying jobs, usually in the service and retail industry. And so those are typically second and third jobs.
The banks are sounding resilient.
I think we're feeling the pain right now.
Resilient.
And even
We're not in a recession.
Because we're seeing the cost of energy
the banks
go up.
are sounding resilient.
And, you know, that's really affecting everyday Americans.
Yeah, and so, you know, as investors, people are expecting some choppiness and volatility. September, traditionally, as you know, it's not a great
Recession?
month anyway.
Never heard of it.
You're absolutely right. It's bumpy, and you know, and historically, when August is a little rocky, that makes September even, you know, a little bit more volatile. And you know, I think right now, because everyone says, well, you know, what are the buying opportunities? You know, I don't think that any have really presented themselves right now. I mean, even energy, I like it. But it's time to be cautious because even though OPEC is really not going to produce any more until January, the slowdown in China and overseas, you know, that could affect things. So, you know, once we get through the Fed meeting, see how the market reacts, if they've already priced in a rate increase and if the Feds actually do increase rates, which I think they will, you know, then we can kind of look at October going forward and see, you know, what opportunities that we have in the markets.
When we think about the Magnificent Seven and some of these names that have pulled back, right? Some are down 10% off the highs or more. I mean, Apple, for example, this week is down over 5%. Are there opportunities here on a pullback, or are you waiting because you still think it's expensive for names like that in tech?
Yeah, you know what? I still think it is. You know, even, I mean, you brought up Apple. You know, with what China is doing, the impact that's going to have on Apple, I'm still not sold on the fact.
All right, nice rejection on the 50 there.
But they're a solid company. I mean, they
have
billions in savings in the bank. But you know, I think the opportunity is probably going to be a little bit later. You know, in you know, buying on that dip. I'm just not convinced that now is the time.
I see, understood. So, is there anything that you would be buying now or putting money to work, or are you waiting and saying, you know, I have some cash on the sidelines?
There you go. Look at that flush. Go.
Yeah. Right now, we've got a
Holy
lot
red
of short-term
candle.
treasuries, a lot of cash on the sidelines. We're positioned to take advantage when things kind of
Selling
turn
a
around.
couple. I don't
And if
even
we
know
see
where
some
we
really
are.
good opportunities and some good buys. But, right now,
That
I
low of the
don't
day?
think that this is the time to do that. I do think that next year,
Wow.
the market is going to rally because, it's about the economy. I would not be surprised, I'd bet even money on it, that the Feds are going to, lower rates at least once, if not more next year. Gas prices are going to go down, just in time for the election. And if we see that, we're going to see
It's
a
hard
rally.
to see where low of the day is.
So if you're positioned properly, you're going to be able to take advantage of that.
Yeah, I mean, there are some people who are calling for a Santa Claus rally, for example. But I did think, I know you're watching the inverted yield curve very closely, but you said math is telling us one thing.
Oh, crying,
The
Nicole.
market seems to be ignoring
I closed a couple more.
math
I had
or the
a lot of
data.
those.
Explain that.
Like 20 of them.
When you're looking at
Which was a lot because they're for
number of
Monday. They're not even
bankruptcies,
for
bankruptcies
Friday.
are up over 17% just in the month of August. Corporate as well as consumer.
All right, I'm gonna wait on the rest of these.
We're looking at all this
I think I only
financial
sold like
data that's
4.
saying, well, even manufacturing is down.
Wow.
8 months in a row, and that's
wild.
a really good sign and negative sign. That there's a financial issue on looming on the horizon. Last time we saw that was the housing bubble. The time before that, it was the tech bubble. The time before that, it was the S&L failure. So there's a lot of data that's saying caution is the operative word right now. But again, if there's opportunities,
You are the
just need to
contributor
make
to
sure that,
Recession Kitty.
you
You're
don't risk
doing
what
it.
you have for something you don't need. That's probably the best way to say it right now.
All that liquidity just.
A good way to hedge or just sort of be cautious in this type of environment. Ed Siddell, nice
That was
to
almost
see you.
some stops triggered me. There's a lot of volume on that drop.
Coming up next,
That's crazy.
trends in the energy sector, the red hot energy sector, and some
Close
things to
anything?
watch. Keep
How
on
about
the
anything
radar. Much more coming up. Schwab
Anything
Network.
get green? Guess you probably wait. Now that it's happened. Should get a low of the day. Pretty close to that line. Maybe even down here. Pre-market low. That would be neat. Man, you had to almost be in those already. That happened so fast. If you're trying to catch those, it would have been... Yeah, that's tough. I'm glad I didn't close them. Jeez. Still have almost 2 hours left too. That's crazy. We could get a full-on reversal today. Too bad these aren't dailies, man. Ugh. Should have been up a lot more. Still down at 50%. Wow. Yeah, low of the day is not going to bring you green. That's crazy. I mean, yeah, we're gonna have to hit pre-market lows for you to get up on those probably. That's good volume. I already took all my chips. Keep pushing. Pocket aces again. Got an overpair. Ah, clubs, no diamonds. Got an overpair, I bet. Oh, I wish I had something slow playing with. 10 is nice, but need a 5 or another 10. Oh, for 40k, I gotta see what he has. Queen 3 is bluffing? This guy won with the kicker.
Recovery faltering and economic data in China
it's crazy, it's so early still.
Much weaker than what we expected it to be. You're still seeing oil at these prices, and it's simply a supply story. We simply do not have enough productive capacity in the world to meet even lower demand for it. If we were to get an upside surprise, let's say Chinese activity data were to start bottoming out here and start trending upwards, I think you'll continue to see pressure on oil prices, because what truly has been extraordinary has been not only the discipline coming from OPEC Plus. You mentioned Saudi Arabia and Russia, but we have also seen a lot of discipline coming out of U.S. producers and U.S. refiners with their capex intention, and that is really constraining supply.
So at this point now, I mean, where would you put money to work in a sector like this? Would you?
Yeah, look, overall, we still find the entire sector pretty attractive. If you look at it on a valuation basis, it's trading at roughly 5 3/4
Alright, 215. A nice little flush on the market. Balancing out with this guy and hold him.
So even on a valuation
20 likes
basis, you still have
on the
space
stream.
for
Thanks
this to
guys for being a
continue
good
to run up.
Friday.
If you get an
We had a good
increase
week.
in oil prices,
Ready for
which
the
we
weekend.
think is where the risks are skewed, these companies will benefit even more.
Right, understood. So overall, energy is definitely one of the areas that you do like. You did note, though, China could be the wild card for investing in this group, right? Quickly.
Quickly.
That's right. If there were to be a material downside surprise or further weakness out of China, that could put definitely a cap on oil prices. We think that's a small risk, but it's not our base case. We actually are starting to see signs that there might be some bottoming out of economic activity coming out of China with the recent data.
Yeah. Tell me more about industrials. You like this group and why?
We do. So I think there's lots of sectors here that are to like. You're talking about aerospace,
I like to slow
defense.
play this guy.
These are all
Never
sectors
get
where we're
anything.
seeing very strong demand for commercial
We're on a heater the first like
aviation.
5 minutes.
We're seeing that defense
Came up so
spending
much.
is remaining resilient, not only in the United States, but really all around the world with the increase in geopolitical risk all around the world. And we're also seeing some companies that can benefit from automation and the adoption of artificial intelligence. We're looking at companies like Rockwood Automation, General Electric, even Honeywell. And again, talking about the sector, this is a sector that trades at 14.4 times enterprise value to EBITDA versus a 10-year average of 16.5. So it's still cheap.
Yeah.
Gotta do it.
And, you know, just looking at that AI space
Gotta
a little
do it.
bit, I mean, you mentioned it
Yeah,
with
stoked. Watch
industrials.
pocket aces again.
It's, you know, there's a way to play AI, and this is another way to do
High
it.
consolidating down here. Close to the low of the day, not quite there.
In this first wave of AI mania, so to speak, has been on the primary beneficiaries of it. You know, you're talking about names
Set
like
up for a straight flush
Microsoft,
there.
NVIDIA,
Dang,
AMD,
dude.
those names that are well known and
Do it.
are you know,
We got
are
one on
well
here.
priced in. That
That'd be
story
so
is that
sick.
growth story is well priced in. But there's going to be a whole
Or just
series of
get nothing.
secondary beneficiaries of AI, and this is going to
Go
come
on.
further down the line. But we're going to see increased productivity and also multiples with a lot of these companies with the adoption of this technology.
Right. Today we spent a lot of time
Oh my
talking
gosh.
about Amazon, Costco,
Queen 6, dude. The winning hand.
Kroger, but they are
Second time in a row I've seen that hand.
do so
take
many
way too
different
much.
stores and retailers and marketplaces. It's not just a Kroger competitor. In
Oh,
fact,
I
so
get a
many
hand.
folks
Just
keep
wanted me to
saying how much
rebuy.
they like Walmart.
Little bounce there on
Amazon,
SPY.
Walmart, Costco, those are names you all like, right? All of those names?
Yes, correct. So those are names that we think kind of stand out in this consumer discretionary / staple space. Part of the reason why we like these names or like these names so much is because of their high factor exposure to quality. I've been here throughout the year sort of pounding the table on that, Nicole. We do think that quality factor, and what I mean by quality are companies that have a high return on equity, means that they have a large moat around them. It's tough to get into their business, but also they have very low leverage. So they're going to be able to perform well in an environment where rates stay higher, because that's one thing we do expect. We don't expect aggressive rate cuts from the Fed.
Got diamonds out there, though.
Even in the case of a mild recession, which we think is something that's likely down in mid-2024, we don't think the Fed is going to have the scope to cut rates nearly as much as they were over the previous two recessions.
I'm scared.
Talking about the pandemic
You
or
very
the
well could have a
global
king.
financial crisis. So you want companies that can perform
He raised
well
on the king.
even in an environment
7-10.
where rates stay
This
high.
dude bluffs a
and
lot.
these are companies that fit that bill.
Yeah, and you know what's interesting? So you talk about those
Hi, bear
consumer
flagging.
discretionary and staples, consumers type of stocks. You had automation, artificial intelligence, and you had names like Rockwood Automation, GE, and Honeywell. But what about airlines? I know some people love them, some people
Barbecue.
don't. Are you concerned about demand and what people are doing going forward, and sometimes the high costs that airlines face? But you like the airlines group, don't you?
Well, I'm selective there, and let me tell you what I mean. So I think we need to bifurcate the airlines into the discount carriers
Bifurcate.
and the sort of more premium carriers.
People use that word a lot.
I think the discount carriers are in trouble because, like I mentioned, we do see a recession coming in mid-2024. They will be more impacted because airline travel among that income cohort will certainly drop. But the premium airlines, the ones that especially emphasize things like business travel, first class, those types of things, we see demand actually remaining quite strong for those. So if you're going to be in the airline space, you want to concentrate on the premium names.
All right. Ahmed Risco of Insignio. Thank you so much. Good to see you.
Gotta put them all in. Let's do it. Come on.
Right, still to come. Las Vegas
Oh my
casino workers big news here because they're set to vote on a strike this month. We'll take a look at
Slow
what that
played
means
me
for
on
some of
the.
big names in the space. We will be right back.
Didn't even see the flush out there. GNS breakout? No, back to BWAP. BBBYQ up 130%. Yippee. Did I sell? I sold a couple. I'm scaling. Yeah, on that big red candle, I sold, let's see, I guess maybe 10%, not a whole lot. 10, maybe 15%. Oh, still didn't really hit low of the day. Not to say we have to, but kind of bear flagging down here. That kind of drop with that volume, I don't expect it to just rip back up. I expect some kind of bottoming before it'll actually reverse, so I think we'll see newer lows first. Unless it was later in the day, and there's going to be a lot more volatility. It's 2:30, we still have some time. I think we could see low of the day, could even see pre-market low. I mean, you could call this the inverse cup already, it doesn't have to hit the actual low. That'll be more understood once we hit low of the day, if it flushes through there, or if it bounces there and makes it better handle. Right now it's kind of bear flagging above it, so it seems like it's maybe building up some strength to just go through it and not give us a a bounce off of low of the day, but we'll see. Down a little bit there. See if this is our flushy. Bifurcated. Bifurcated. Strange word.
Bifurcate.
Bifurcate. Barbecue holders want them to bifurcate the stock. Clubs. Yeah, slow playing me. Straight got there, clubs are there. No re-raises. Might have it. Unless he has jacks, he probably has jacks, I guess. Are you kidding? Okay, that's straight. What? I had a pair of 8s. That was mine. Hero fold. The slow play stings again. How low will she go? What, spy? What are you thinking that? Break 445? Yeah, no, I think it probably still will. I still have a big amount for it to sell, so. Come on, call this bluff. Oh, scared, are you? Scared. Bifurcate. You talking about spy, Tasty? How low will this spy go? We're just talking about intraday. Oh, diamonds. Do it. He thinks tipping the dealer gives him better hands, I bet. Market will bounce next week, spy back to 455, 450. Please don't have kings. Totally has kings. I gotta check. A 6? Here's your bear flag still building up. Some liquidity and then flush. See what's happening here. Diamonds. Call me. Yeah, figured you had something. It was this guy. The queens. Make me buy in with my last bit. Would I do a live stream with him? Like, what do you mean? Okay, kings, jeez. Called. Give me the ace, give me the spade. Or I'm out. Got the ace, let's see if that's enough. He's catch like what an idiot. Oh, that kings. Yeah, no, I'm familiar with Morantz. Celsius, watching 1 second charts. Well, you got an engulfing candle there on the 5 minute, Bubba. The red bearish candle. That is neat. I can't win on this table anymore. That last hand was just luck. I can't like legitimately beat these guys. I don't know why. I slow play them. They get it on the river. Play aggressive. Then I miss, and then they hit. Or they fold. Eyes coming up there a little bit. can't slow play because I don't land any hands. Close. No way. Watch 10 queen. Oh my gosh, you're freaking kidding me. Yep. 10 queen. Yeah, and Happy Money YT is our Twitter. My Twitter. GME right around BWAP down 6%. Ah, GNS broke through VWAP there. I can't believe he had 10 queen. That's insane. Timmons Fugazi got like over an hour. He was slow. Well, I guess he wasn't slow playing. He didn't land it till that river also. Coming down there. That green to red candle's pretty bearish. Big liquidity pump. There was one hand that beat me on that. He had it. Oh shoot. I had to raise there. Alright, well I'll get my slow play. And something else is gonna land. Nothing's setting up though, this is pretty good. Good for a slow play, but no one's raising. There you go, new lows there on SPY. Boom, I played even slower. Slowly. I don't know, I think I just need to go all in there. Kicker. The kicker. Yeah, alright. The kicker. And the green can't look at right on our line there. Wow. Interesting. Where's that line even from? Always curious what happens right on our lines. All from that low of that day. Isn't that crazy? Also retested there. That might have been the low actually. I don't know. That's a pretty big candle out of there. Sold a couple more. Do it, man. I don't like those fatty candles with volume. Wish I timed it on that line. Still think it's going to come lower, but GME down 6.3. Barbecue up almost 1%. $15 minutes to power hour. Yeah, I'm closing a couple more. Out of like 40% of them. Getting this close to power hour too. It's not an engulfing candle. See if it stays below that 9 moving average. Not full, I'm out of like 30% of them. Yeah. I can't remember how many I have. Okay, now I think I'm out of probably half. I think we'll still get a new low, but I had a pretty big amount. Large number.
24% more in their overall tax rate. What does that encourage? The illegal markets. And so until we fix that problem, we're going to see illegal markets because they're the illegal players are like, this is a bonanza. We can sell across state lines. We don't pay taxes. And then meanwhile, the people that are trying to follow the laws can't pay the tax. Now, if cannabis goes to Schedule 3, which could happen now with what the HHS department did, that gets rid of 280E, and that will help the legal markets in a big way because they're paying much less tax. Their cash flow will go up, their valuations will go up overnight, and we'll see capital flood back in as well. Now, this you hit another nail on the head with this being the Wild West. This is anytime we have the birth of a new industry, there's a ton of risk. This should be kind of a side part of your portfolio. I always think there's a space for any portfolio of 5 to 8% in riskier things, a higher risk reward. But
I'd love a flush down of 443 though.
On the companies and the industry itself. I'm
going to hold the rest for that.
We are 10 years later. I'm a big believer. I see nothing stopping this movement. I think if we go out 5 years, we're going to see a national market. If Ohio legalizes in November, they'll be the 24th state to have fully legal cannabis. That we're halfway home. That's 24. We've got a bunch of other medical states. And so I see we've come a long way in 10 years. It's still bumpy. It's still the Wild West. There's tons of illegal players. But think of one other factor, the aging of America. I'm almost 60. Many of us baby boomers are aging out. We want access to
chop for a good portion in the middle of the day, which almost every day.
Anxiety, dementia, whatever.
But we got out of that chop
take opiates
right here.
But guess what? We don't want to buy it on the street. I'm not going to be buying weed down on the corner in New York City. I want to know that the weed I have is tested and been approved by a real lab.
Yeah. Well, all right.
We're getting a pattern. We got this inverse cup.
I think the medical side of it is a lot
more
easily accepted than
being
the
built.
recreational side. I mean, come ride the subway with me sometime, Andrew. You'll see what's going on in New York City. Oh man, Andrew.
Yeah, I get it.
It's great to talk with you.
Thank you.
CPA, Dope CFO Certified Advisors. Still ahead, let's bring in our panel, cybersecurity.
There you go, spy.
Featured next.
Do it. Ten minutes of power hour. Flush hour. Close another one. Bullish or bearish going next week? What are you bullish going into the week?
Companies to build companies that address next generation attacks, and we're in the midst
how's
of
next
that
week going to play out?
where companies are building and they're building to defend and protect against those next generation attacks that are now
got CPI Wednesday,
by machine learning and AI,
initial jobless claims,
other levers
U.S.
that
import prices,
nation states,
I don't know, PPI might be PPI.
To gain access.
I only know about the CPI
around the world. So I think in terms of what we think about this today, now in this current environment, no better time than the present to be investing and building cybersecurity companies.
Great, and you'll tell
I don't know. I think it'll be pretty bearish because the data's been surprising to strong economy
and I know people love it.
this last couple weeks. So
Yeah,
that trend will probably continue.
To see growth for the company when they reported earnings, they beat
Which will be
both
bad
the
for the
top and
market.
bottom line, and also exceeded the forecast for the future here. And I think the biggest thing to really focus on when it came to the earnings announcement was the net dollar-based retention rate, which is at 121%, which means that they are continuing to bring in new customers. And obviously, we are actually seeing a little bit of bifurcation when you're looking at the marketplace here. There are some that are able to continue to bring on new clients, and then there's others that are having a little bit of a tough time trying to onboard here. And I think what Richard is actually talking about when you're looking at the AI space, that brings a huge opportunity, especially for companies that are going to start, leveraging and implementing their own large language models and other AI models. They're going to need to protect that as well. So I think that does provide Zscaler and some of the others in this space to be able to have an opportunity to capture market share. And those that actually have exposure to not only cybersecurity, but storage, networking solutions, software solutions, may be able to gain some of those larger customers because they can provide
10 minutes to power hour
of services for those large customers.
See if we break through low of the day here.
Definitely being realized.
Seems like we might build up some nice liquidity right here, close to it.
Right, understood. So at this point now, and you just heard a good report and a lot of optimism and boosting outlook of some of the analysts on Zscaler. Richard, I mean, how should
Nicole's got that China cough.
Palo Alto, CrowdStrike, Zscaler, Fortinet. We have all of these names. Your names here.
You can hear it. She's trying not to cough.
With them. Why is it that you're going with a lot of names that we don't necessarily know yet, and not the names that are?
Dude, that sucks, man. If you have to speak.
We're a private market investor, so we focus entirely on
mute, cough, cough, cough.
Of cybersecurity.
That's what I do.
That, in fact, the public companies that you mentioned are classically targeting to acquire
100 underlined twice.
And then upsell and cross-sell.
Thanks for the dono,
on their
Corey.
platforms. So when you look at sort of the R&D engine, if you will, for publicly
100%. Okay. What the heck's 100 underlined
almost comes entirely from the private markets where
that's something you wrote out. That's weird.
Continue to happen. I think when you talk about AI,
let's get nuts. Let's get nuts. Thanks. Appreciate the dono, Corey. Here we go. New low there.
That are protecting
low there on SPY.
The current developer environment. We invested in a company called
all right. Low of the day is 444.81.
Technology, significant market. Protecting the developer environment. So these are developers and builders of machine learning and AI algorithms that are utilized by governments and organizations around the world, and protect AI as a market leader in being able to defend and protect against attacks and that increasing attack surface. So keep an eye out for that next generation of machine learning and AI companies. And if you can access the public markets through funds like ours or other vehicles, that's an opportune time to gain access to that type of exposure.
Right. It's great to see you both, and thank you for explaining all of that to us, Richard, and how to do this, through a company like yours or the public space. We appreciate it.
Yeah, we got
Kevin
a few.
Green and Richard Seawalt.
A few lottos.
For being with me, I'm Nicole Petalides.
If we get a power hour flush.
11 a.m. and 2 p.m.
Thanks, Nicole. Have a good weekend.
Stock Exchange. Keep it right here. Caroline Woods, Market Unclosed, next.
GME at VWAP down 6%. GNS up 12.5. Barbecue. Still below that resistance. Run down 3.9. We got Dish up 3.9. Nice little VWAP support. Wear down 5.25. Teladoc down 1.5. Etsy down 3.18. Base is down 1.8. Beyond's down 2.25. AMC down another 10%. What do you know? Volume is decreasing though, so I think we're probably nearing a bottom on AMC. Looks like they might be done selling shares too. They're kind of getting close back to the volume before the share offering. So might see some bounces on AMC next week, or at least flattening. Unless they say, hey, we're gonna offer some more shares. Whee! And then next week is OPEX. Pretty big OPEX probably. By a downward spiral. Like on the longer time frame. We're just talking about right now. Here comes Power Hour. Close to the low of the day on SPY. About to go from green to red actually. That's pretty significant with the SPY. See if it flips red. There's I went break even for a second. Doesn't want it. Not yet. Just now, yeah. There's red to green, or green to red. Is now red on the day. Hour, engaged.
Excuse me. The Dow up about 30 points.
Oh, dude, Caroline's got that China cough too. I mean, everybody's gonna have it. What's concerning though is how long it's lasted.
Excuse me. Let's discuss some movers with Renita Young, senior markets correspondent.
If there's people that have serious issues, I don't know, this might be bad for them.
From my coughing attack here. We're going to talk about Apple to kick things off. Apple share is up modestly today, up about 0.3%.
Both those girls have it.
Big event next week, the product launch, iPhone 15 expected.
There you go, new low on the day.
No problem, Caroline. I've definitely got your back because there's a lot to
Mute her, let her get it out.
Apple. It's had a rough week.
Jeez, man.
Started off hearing about
it's like one of those zombie movies.
On iPhones, and then we heard about Huawei comparing or creating
Huawei?
a competitor to the iPhone to try to grab some of its market
I'm
share
selling
from Apple
one.
in the country. And today we see a price target cut at JP Morgan to $230 from $235.
Dwindling down. I don't know if I want to sell more.
An overweight rating though. And
yes, I
shares
shall.
Are trying to stay in the green today, better than yesterday. But the analyst believes whether the shares outperform in the remainder of the year is dependent upon beating what are now lower investor expectations for the iPhone 15 launch.
A little fleshy flush for my last few here.
Now, JP Morgan says that
I'll hold these till pre-market low.
of the year. And
yeah, see, it just busted through there. So this was our bounce on low of the day.
Now Morgan
Liquidity.
Stanley also talks about this stock.
There's the fleshy 3 to low
rating and a $215 price target on Apple, but that it's unlikely that the China iPhone ban will make a material impact on the stock.
Down Fridays, typically down Mondays, right? So
too much of a big deal, but they did note that it's really more of a mutually beneficial relationship.
I wouldn't expect much
between Apple and between
after hours.
Because China sales, they do make up about 19% of Apple's total revenue. But Apple is also critical to the contribution of the Chinese economy. It's a critical contributor
Nicole
to
and
the
Caroline.
Chinese economy because it's got millions of jobs that depend on device production and app development. Now that also means that Apple is incredibly exposed in China because a lot of its devices are manufactured over there. But as this story continues, Citi also remained positive on Apple, saying that heading into its iPhone launch event on September 12th, that it does expect positive things. A lot of investors are highly anticipating
sounds good still.
This new drop of the couple of iPhones that will come out, as well as any other software upgrades as well.
All right, yeah, I was just taking, Renita, a look at the price target for Apple. It's only come down $1 over the past month, so it doesn't seem like analysts are too downbeat about the China headwinds. It sounds like maybe China needs Apple just as much as Apple needs China, but we'll have to wait and see how that plays out. And, of course, look forward to the September 12th launch event. All right, you're also taking a look at shares of Kroger. They were down this morning, and now they're up 4.5%, one of the best performers on the S&P 500.
Yeah, well,
bring us up to speed on what's driving shares higher.
Of course. So today, Kroger had earnings
yeah, it's like,
that beat
can't
expectations.
talk.
It did announce that it has agreed to an opioid settlement, as well as will sell around or a little bit more than 400 of its stores to be able to acquire Albertsons. Now that acquisition has gone into some antitrust scrutiny, but they're even trying to be able to deal with that ahead of the game. Now adjusted earnings, they came in above expectations at 96 cents a share, but revenue was below expectations. It came down 2.3% year over year, and it was at $33.85 billion. Same store sales minus fuel grew 1%, but that missed the expectation of a 1.3% rise. Now, Albertsons says, or Kroger rather, said that sales are under pressure as shoppers pull back on spending. Naturally, they're looking for cheaper deals. The company did affirm its fiscal 2023 outlook, however, for adjusted earnings and same-store sales growth, but they noted that customers are going to remain challenged. Now, let's talk about this opioid settlement. Kroger reached an agreement to pay $1.2 billion to states and subdivisions, and then $36 million to Native American tribes in installments over 11 years. They're settling the majority of their opioid claims. And Kroger says the settlement is not an admission of wrongdoing, but as a result, they booked a $1.4 billion charge. It also includes attorney fees as well. And then lastly, with the acquisition happening with Albertsons, the company is selling more than 400 of its stores. It also includes about 8 warehouses, 2 offices, or 8 distribution centers, 2 offices, and then 5 of its private label brands. And they have the option to sell an additional 237 stores if it's necessary for any antitrust clearance.
Yeah, it seems like that's what's really driving shares higher today. We're also seeing Albertsons shares up more than 3% today. So nice turnaround for Kroger. Renita, thanks so much for helping me power through here.
Of course, you got
really
this.
Appreciate it.
You got this.
All right, now time to welcome in Kevin Hings to talk about today's market action. So Kev, major averages giving it their best shot to close the week on an upbeat note, but they're losing some steam here. We're looking at a mixed market now. NASDAQ has turned negative. S&P basically flat. Dow only up 16 points. What do you make of this? I mean, overall, it is a losing week.
Yeah, hi, Caroline. You know, if this was the dashboard of a car, I think the engine light is going on here as we get to the end of the day. I think we're losing a little bit of momentum here and kind of stumbling into the end of the day. But that being said, this is a nice consolidation day in a lot of sectors. You're still having a good day in energy. You're still having a good day in some of the utilities. But all things considered, yeah, this has been a pretty good standing 8 count for the market this week, Caroline, as you know, the dollar's been higher for the week. Yields have been higher for the week. Crude oil is still on the march towards $90. And then when you look at all together, you know, stocks were able to.
What's weird though is this sickness, like,
slightly lower, but
I know it's contagious, but
were lower 10 days ago
I've had it for like
this week.
3 months now.
Not as much
My wife
damage to stock
never got it.
in terms of, but with the
Even my kids had it.
moves going on. So
They only had it
little
for
bit
like
of pressure,
3 weeks, so.
Consistent bad news or concerning news in Apple, as you know, throughout the week. Even though Apple finds itself up a small bit, up about 0.4% today. So, you know, this day, Caroline, at the end of the day right now, is going to turn out to be pretty mixed. I've got, in terms of the S&P 500 sectors, I've got 6 of them up and 5 of them down. So a real mixed day in the S&P 500. We didn't get a lot of economic data this week, but some of the economic data we got was pretty strong and a little hot for the market. Next week, we'll get the big CPI report on Wednesday. That'll drive a lot of the rhetoric going through the next week and then into the Fed meeting on the 19th and 20th. By the time we get into work on Monday morning, we'll be in a Fed quiet period, so we won't hear.
Yeah, we're still in this downtrend.
But this is a market stumbling.
Would have closed the rest if we broke up there, but
on.
I'm
How
holding.
reactive could this market be when CPI and potentially PPI, we know that's not as market moving, but CPI or maybe retail sales data comes out next week and shows something that maybe the market doesn't want to see?
Yeah, good point. PPI won't usually move the market, but CPI usually is the #1 look at inflation throughout the week. And you're right. Part of the problem with stocks right now and the S&P 500 in general is the valuation, right? Once you get to a PE up around 19 or 20, where this market sits right now, it doesn't take much to cause a little hesitation in stocks. And I think that's what you're seeing. The news out of Apple that's in 3 of the 4 major indices, it was like every day China released some new development, all working against Apple. And I think the comment you made to Renita is accurate. Both sides. China needs Apple. Apple needs China. It would be a big hit, right? They get 18% of their revenue from China.
Apple doesn't need China either. Come on.
Apple has a lot of jobs in
A lot
China.
of companies are
so they need each
switching
other.
from China.
It's a rough week in that
Taiwan.
relationship, but at the end of the day, it might just be valuations that make us
Singapore.
drift or move lower from here, Caroline.
India.
Yeah, I wanted to ask you about that. Apple
Mexico.
is down about 6% on the week. I was talking to Dan Deming. He sort of was looking at that as a buying opportunity earlier today. But overall for the market, I know last week, I believe it was, that we were talking about some rich valuations for stocks and that being a potential headwind. So with the Dow down 1%, NASDAQ down 1.5% this week, S&P off, call it 1.4% right now. Is that helping the case that maybe we're bringing valuations down, or do we need to see a pretty big tick lower to make this market more fairly valued?
Caroline, if you look on the Thinkorswim platform under PE ratio for Apple, it says right now 29.9. Well, if you look at a 12 or 13 year chart of Apple's PE, it's spent a lot of time below 20 in terms of the PE. Now, it's a new Apple the last several years, and a higher PE may be justified, but you can make the case that Apple is fully valued here and was getting way ahead of itself. Now, what's the right valuation? That's not my area of expertise, but certainly we all know that long-term Apple is an impressive company with a bright future. But at a 29 PE and where the overall market is in terms of PE, you can't really say it's cheap, Caroline.
All right, we'll leave it there. Kevin Hanks, thanks so much for kicking off the show with us. Really appreciate it. Time now to welcome in Zachary Hill. He's head of portfolio management at Horizon Investments. Zachary, happy Friday. Thanks for joining us.
Happy Friday. Good to see you.
So So, Zachary, September's off to a sluggish start. Nothing huge, but certainly not all that impressive. Historically, I guess, seasonally, that would be what we would expect for September. But I guess the big question is what comes next? Where do we go from here?
Yeah, I mean, this is a tough month seasonally, and I think that's pretty well known. And I think it reflects kind of the fact that, look, we had a push higher in interest rates this week. We've had volatility and a big downdraft in Apple, as you were just talking to, the largest holding in the S&P 500, and the S&P is only down 1%. And so, as we kind of look at it here, I think we're in this section where really the direction of interest rates is going to drive overall markets. We had obviously a big move in August. Don't put a lot of stock in that because, no one's really in their seat in August. But now that it's, school's back in session and people are looking for like a new narrative to push into the end of the year. And so we do think, the direction of interest rates, and obviously next week's CPI is like a great indicator of where we think that might go, even more so than this Fed meeting, which I don't think is going to be really much of anything. And so that's what we're watching right now. It's kind of the biggest focus across our team.
So if this is a market that's going to continue to be rates dependent, should we buckle up and expect more volatility in store?
Yeah, I think so. I mean, look, the rates market is very deep, and the Treasury market's the most liquid market in the world, and it's been moving around quite a lot. And so, that tells me that people are just having a tough time kind of figuring out exactly where this stuff should be. We've obviously had a lot more duration supply coming from the government than we expected. We're dealing with a lot of corporate issuance, investment grade issuance, so far this week, and likely to continue next week too. And so there's just a lot of things to digest, which is going to make that trade volatile, and that's going to breed into kind of what's going on with the dollar. Obviously, quite strong, kind of at the highs of the year here, and then what's going on with equities, and not to mention kind of the idiosyncratic stuff that's going on in crude and China. So there's a lot of stuff that we're focusing on, and I think we're likely to see some trends change over the next few weeks. Just right now, as we said, not really seeing that crystallizing just yet this week.
Okay, because I was taking a look at your notes, expecting more volatility in the near term, but the medium term positive story you say is still intact. So in the medium term, what drives stocks higher from once we get past this volatility?
Yeah, so great point, Caroline. I mean, the way that we've been thinking about the economy, there's a lot of different frameworks that people use, but ours has been primarily consumer driven, and sort of what we've seen, over the last, call it 3 years, is we've had a light switch turn off of the economy and massive stimulus coming out of it, and consumers' balance sheets and corporate balance sheets got stronger, not weaker. That is not something that normally happens when you have a recession. And so, as we look at it, there's just a lot more durability overall in the economy. We've been saying this, really for the last 18 months now, and it was pretty lonely at points last year and earlier this year. And the thing that I guess worries me a little bit, I think that's still intact, by the way. A lot of that has to do with the labor market. There are demographic reasons. There's not as much labor supply, so the labor market's going to be tighter. People spend money if they earn money in labor income, and I think that's going to continue. And so that's that kind of underpinning of that medium term picture. I think what worries us a little bit in the short term is like, look, that was out of consensus 3 months, 6 months, 9 months, 12 months ago. And if anything, right now, it's getting to be a little bit more consensus. And so that just in the near term, and the negative seasonality and what's going on with the biggest name in the S&P 500, all that has us just a little bit cautious over the next few weeks, and really kind of looking for a potential change in that trend over the short term. But that medium term outlook is still positive. Economy keeps chugging along. It's just a lot harder to kill it than it was when we were a manufacturing-driven economy in the 1960s and 1950s. Just that's not the model, I think, that is appropriate today.
So economic momentum is a warning sign. I also saw another warning sign you say is kind of waning interest in the AI trade. Does that mean you don't think it's time to jump on board the big tech bandwagon? And what areas of this market would you jump on board with at these levels?
Yeah, so we've been overweight the mega caps and the tech sector pretty much all year, and especially post the SVB kind of early March debacle that happened with the regional banks. And so, a lot of that for us is a quality trade. It's a safety trade. And it's also, that AI theme, which we do think is a really a multi-year type of phenomenon. And so there's going to be a lot of build up and ramp up in that. But, as you mentioned, and I did put it in my notes, but we've been noticing that some of these, kind of AI names and the baskets that everybody has created to kind of track this theme, they started to slow down.
Still holding on to these contracts.
Versus the S&P since kind of early
Got
June.
close to me, closed them out
You
there.
had some really good numbers. You had great numbers from NVIDIA.
Keeps fighting. I think
when the
we
price
could see
doesn't
new
follow
lows.
those fundamentals, especially in a trade that has moved very far, very fast, that has us. It's got our attention. This might be a little bit overextended. It might be time for a pause. That doesn't mean that it's over, but it does mean we might see a little bit of catch up from the rest of the market. And so, kind of the way that we're thinking about it, our top sector picks, we still
Theta
like
killing
tech,
you.
so that's one of our bigger overweights. Communication services and energy.
Is the farm striking back?
Us, but just really, I think just kind of quietly bullish price action in oil, given everything that's going on in China and all these kind of negative backdrops that you think should be weighing on oil prices specifically, and it's just not happening. And so, that we think, especially given the kind of re-rating that we saw in those names earlier this year when everyone thought we were going into recession, that we think is a nice setup. And so those are the areas we like, and the parts of the market that we don't. I mean, the number one, I would say that our biggest underweight across portfolios is going to be financials. Just a tough environment. I mentioned earlier how the private sector in general is not as sensitive to interest rates. Balance sheets are not as sensitive, but there's one place that interest rates really do matter quite a lot, and that is in bank portfolios. And so you have that headwind, plus you have increased capital headwinds, and concerns that we're sort of near the end of the cycle, which we don't think we are, but the market seems to trade it that way. And so that's kind of how we're thinking about it. Kind of a little bit of a barbell portfolio, being selective on the cyclicals, and then, liking that large cap and quality trade that has been a really good winner all year long.
All right, we have to leave it there, but appreciate all of those picks. Zachary Hill, Horizon Investments, thanks so much. Have a great weekend.
Thanks, Caroline. You too.
Thank you. Coming up, we'll dive into the world of ETFs. The founder and CEO of Greenwich Shares joins us to discuss its newest ETF launch, and we'll discuss some single stock ETFs as well. Stay with us. Market on Close. We'll be right back.
Single stock ETFs is moronic. Give me your money. I'll buy this stock for you. Yeah, I only charge a little fee. Yeah. Simple. Oh, you don't want to go long? You want to go short? Well, that's even more difficult. Give me your money. I'll figure it out. Dude, coin's volatile, man. Things are crazy. Were those just dailies? Or what are you talking about? Oh, yesterday? Yeah, coin goes crazy. It's a good one for options. They're expensive though. Coming down a little bit, getting closer to the low of the day. 20 cents to 380. Dang. Where were you trying to get them yesterday? Today is pretty much flat on coin. I know I should start trading weeklies on some other tickers on like Thursday and Friday. Leave SPY alone. Yeah, nice bull flag yesterday on that breakout. Could have even gotten them after that breakout of the bull flag. Probably still went like crazy just from this move. New low on the day there on SPY. Still holding these puts. Likes to crab me trade, yeah. Yeah, that's the thing. If there's not a good setup on SPY, just start scanning some other stuff for weeklies. You just gotta avoid like middle of the day, usually. These puts I got, let's see where to get them, right here. So I didn't time the top at all. These weren't bad, and these aren't even dailies. These are Mondays. We're up 60%. These dailies would have been up probably 100, maybe more. And if I got a better entry, probably like 150, 200. And this isn't like this. It's a bit of a move, but it's not much. It's all another one here. Selling another one. Alright, out of the last one. We get calls now for a VWAP move. I'm not going to be around for it though. It's 3:30. I'm going to cut out a little early today. Yeah, that was nice. I should have to be more patient on my day trading account or something. I'm not sure. Because those afternoon trades, when I've been out of buying power, I use my backup account. Backup account's almost always been green. So maybe just stop trading so much in the morning. SPY might not be done. Might keep flushing here. I'm gonna take off early though, so I didn't want to wait through it. Dang, yeah, we might see might still see that low pre-market still. 3:30 though, not a whole lot of time left. Thanks, Tasty, appreciate it, man. Hope you guys had a good week. Good Friday. Got GME down almost, yeah, 7%, so kind of interesting. Earnings did well, beat, and rallied and then dumped. So still below its resistance. I think 16 something is still in order for sure on it. 16.18. Maybe if that breaks, 15.50, and if that breaks, I think $10. And then barbecue's flat. Did bounce up a bit today, so kind of dancing around that resistance. Pattern wise, it looks a little more bullish though. You do kind of have inverse head and shoulders building now, which kind of just makes me think it's in a sideways range. So the bullish channel kind of broke out of, now it's maybe in horizontal channel before it comes down, or it could be horizontal and then break back to the upside. We'll see. It's definitely a risky play with the clock ticking on that one. Big bounce on GNS today, up 11.5. Nice show of support at $1. Cool trading range on this one, up to $1.30. Really just have to be decisive on taking profits with it, as it's a fickle one, and getting in with it. On the longer trend, it looks fine, kind of consolidating, I guess. You had this engulfing candle back here. MACD's bearish, we got red under the 9, but how much support it showed on $1, consolidating. If it breaks that 131, maybe an uptrend. maybe we'll continue to go up. I don't think there's many more catalysts on it. They had their dividend and everything. That's all done. Yeah, SPY's coming down some more here. The barbecue GME. What's we looking at? Got Hawaiians up 1%. AMC continuing to flush. It seems like they might be. Maybe they offered a little more shares today, but I think they might be done. We might get a bounce next week on AMC. This volume has been decreasing quite a bit on this drop. Lots of gaps to fill up there. I almost even want to play a long, get a long play on it. I don't know, options are probably crazy. I don't have like any buying power in my options account right now. And they want me to call them in to make an open up a trade. I don't know why. I think because I went for Charles Schwab, but I'm upset with myself for all those options I opened up just frivolously, it seems like. And then didn't take profits on Rad, and it had that huge move, and a couple others. But SPY coming down, yeah, new low there. But anyways, yeah, it seems like maybe an IV, I'm sure is crazy, but it's actually not insane. 150% if you go out to October monthlies. So tons of liquidity on this chain too, which is nice. Wonder where I could buy those. I'd like to just make room on my options account, but a lot of it's longer term stuff now that's just so far down on. I want to sell it. Still believe in it. Check this out. Gotta sit back and watch for a few days. Yeah, I mean today I did well in SPY. Just that morning I end up kind of scalp trading and watching on my other monitor on the 1 minute, and I just don't. No, I'm not good at that. I don't know. You just stop doing the 1 minute. Makes me overtrade, and I'm not good at scalping. Anyways, let's see. Got a tiny bit of buying power. Oh yeah, I have to call them. They have 20% still? Oh my gosh, Bubba. Hey, swimming his DuckTales of gold. DuckTales. Woo! You're getting theta slapped. Alright, I'm just gonna get on this account. If I can. I'm just looking at AMC 10 calls for October. Giving myself plenty of time. Just keeping it nice and simple. Lower IV. Easier to be right on. I'll end up selling them next week though. $128 million buy-in balance. Well, there you go. There's your bounce. Beginning. Yep. Calls to BWAP. Laughs and goes, thanks, Abes. DuckTales. Oh, woo. pounces into pool of gold. I have to remember to even check it on this account. I never go long on options on here. Okay, I got 10 strike. Partially, what the heck? 10 strike AMC calls for October. This is just basically a bounce play. No TA showing that's starting to reverse. Well, RSI divergence could... We get a little bounce on next week. And you do have an RSI divergence here. Other than that, there's no TA. Weakening volume on this sell-off and just how oversold it is. Actually crazy, it's not even more oversold on the RSI. Yeah. Give myself till October, 10 calls. Yeah, SPY. What an ugly daily candle. Oh man. Is that called a gravestone? Can't remember. I think that's bearish though. Still in the chop range. Inverse cup and handle didn't play out because this went too high. Now I've kind of got another little inverse cup right here, and that's probably the handle. You see that? Made the bottom of the cup yesterday, and today was the handle. So see if that plays out. Probably coming back down to retest that cup line at least. 442.5 for 275, and then if we break through there, probably make our way back down to the lows here. 433, all in time for next week's data. Hey Tasty, you got October 2030 calls in GME. Stop. I line up with ABC, AMC. I don't think GME and AMC are going to move together at all. I think GME calls are going to die. Unless you're short those calls. But I could be wrong. Sometimes it wakes up out of nowhere. Especially 30 calls. That's just outrageous, Tasty. What are you thinking? You got 30 calls. You want this thing to go like you're 60. There's a reason why calls are cheap. Yeah, AMC, I'm not expecting like a squeeze. I think just a bounce from the lows. Basically, if they stop selling shares to the market, I think we'll see a move once the share offering's over. And it's they started on Wednesday, Thursday, Friday. It makes sense that they would end this week. And that volume decreasing. I don't know. Anyways, that's what I got. Thanks guys for watching. Have a good week. Have a good weekend, rather. Thanks Tasty. Thanks Kevin. Thanks Corey. I'm Gilly, Bubblicious, Kitty Daddy. Appreciate all you guys' support. Yeah, I'm closing out a little early. 23 likes on the board, not too bad. Thanks, Christopher. All the lurkers come out. Thanks, Kevin. Appreciate it. Saw a lot of open interest. It could be a lot of things. That could be hedging. Be a spread. You just don't know. I could have a huge bearish play with a bunch of 30 strike calls in GME. Yeah. 17 cents each. All right, man. Yeah, I mean, if you get them for a good price and get a little bounce, and just know that they're way out of the money and very unlikely to hit big. So if they go a little green, don't be scared of taking profits. Thanks, guys. Have a good weekend. Sub up, like up, comment down. Happy money sticks around. We'll see you on our Discord server. Link for that's in the description. And we have a Twitter also. If you haven't followed us on there, it's at Happy Money YT. Join me on there. We can do like Twitter Spaces or something. Okay. Later, guys. Peace out.